Good morning. What's up, everybody? Good morning. It's chat. What's up? Mike, Doug, Chris, Dominic, Ice Wild, Simon, Lucas, Brian. Lock you down. Ransom, Lucas. Everybody. That's Lucas. Sorry. So got a little bit of a cold again, like I'm getting like sick a second time. So I'm sorry if I'm coughing on stream here a little bit. All ready to do this. MHP last night was awesome. It sure was. Looking at this market, right? We remember yesterday we sold off pretty hard. A couple of things, Jolts came out, pretty good. The services PMI came out with a large blip. The market was already selling after the Jolts a little tiny bit, and then that just kind of tipped it over. And then Catalyst created an event. I mean, it's a huge thing. Yeah. So, market's still pretty hard. We know the whole drill here. When you get yourself a Catalyst, you sit out. We always talk about that. I'm going to pull up NASDAQ chart here really quick. You know how it goes. Once you hit that news moves this distance, let's just sit out for the rest of the day, and the market fell and didn't lose anything. Gotta love when that happens. Looks like we have a little bit of pre-market selling as well. Let's double check to make sure you don't have anything going on there. That risk interval distance, you go to the table. What's up? What's up? 157.75. See if we have something here. Market opening in 9 minutes. Yeah, so on Qs, we're kind of in that same boat again. Below this line, market's going to be choppy. We talked about that. The VIX goes up, the VVIX goes up. So as long as you're above 21,287, you're good. S&P, kind of the same thing. Let me get this guy here. You just don't want to play. Market's going to be really crazy. We talked about this when we had talked to you guys about the VVIX. When Catalyst is active, VVIX can go through the roof. It's already through the roof right now. And so you don't want to be in a place where you're experiencing a whole lot of drawdown trying to trade. Like I said, you guys know I'm the perfect series of tools that I use to avoid crashes. And you guys watched yesterday, market's crashing. I'm not out there hemorrhaging money. I have such a really solid, good set of tools at my disposal to allow myself to avoid the market when I need to. These lines here. Okay, cool. Just if we're out the door, nothing crazy. I'm going to turn, and for those of you that mentioned, I'm going to turn the music like down, like where it's like barely even there. Going to close the gap on SPY. Yep, let's mark our gaps really quick. So all of our greater market signals went bullish again, then we lost MHP yesterday. So market's still existing and a longer monthly map term, roughly, 2-3 months of solid bullish setup. This looks really great. You can't get a better monthly map. I'm hoping market stabilize today. Yeah. I'm really excited about that opportunity. And so we lost MHP. So again, that it's going to create some volatility in the market, but below monthly hedge pressure and S&P is like one of those things that you don't want to see happen if you're trying to wait for a market to recover. Today could be the day. We'll see. We'll see what we end up getting. I'm excited. Now, futures are gapping. S&P is gapping practically flat. So as we open, it's not going to be much. You're going to be right on the lines of resilience. This white number is going to be very important when you start. What the heck? Oh. What's up, Actor? Good morning. How does our indicators correlate with order flow or market profile? So basically, what we do is we use options to forecast where volume will be and which direction the flow is going to be. If you do the options math correctly, you can dictate, just like a liquidity map on the side shows you where the flow can be, the direction. So that's what you're seeing right here. So what we do against both of those is we're a leading indicator of that. One thing is to monitor flow as it's happening. Another thing is to, draw a market profile, which shows previous, volume and things like that, as historically in the past where was volume. But what we do is use options to paint a picture of the future. This is where volume is going to be in a place that we haven't traded yet, like today. So hedge pressure, monthly hedge pressure, all of that is going to show you where volume is going to be without fail. So anytime you touch hedge pressure, monthly hedge pressure, or bull zone bottom, bear zone top, these are what they are, as you guys have learned from what we teach you, is that the zones are where we calculate to be kind of like if you were to take all positions that exist and put them on a seesaw. This is where the abundance of long delta hedging against bulls is to market maker options, right? Are in abundance, and here's when the bears are. So essentially, dealer puts in abundance, and so we look for the split. We use a very strong divider to make sure where is that exact dividing line. It's a very sophisticated piece of math that does this, and from here we can determine the majority of the max amount of longing due to this mechanic, what we call bull zone, is right here at this edge, and then the max amount of shorting is at this edge, and then overall the max amount of hedging against dealer options is these two lines right here. So the idea just comes down to, I can tell you where volume will be before it happens. So market profiling, volume profiling, anything like that. Look, I know there's an event here, but breaking hedge pressure created the event. There's the volume right there at the top. So that's how they work, I guess, together. Those things look or monitor or look at the past and tell you how something worked in the past and aggregate the data to show you. Ours is forward looking. So liquidity map's going to come out. It's telling you these are the volume hotspots. Anywhere. An example is yesterday's map is today's volume profile. If that makes sense. So like without fail, when you touch a bear zone top or bull zone bottom, you're going to see volume. Right here, there's volume as you pass through here. As you touch monthly hedge pressure, bull zone bottom, volume spikes both those places. Basically as you keep running back and forth, even during an event or a catalyst, here's the bull zone bottom, there's the volume spike, etc. Here's the bear zone top, volume spike, bull zone bottom, volume spike, right? So it's like we map out where that volume will be. So if you draw a profile today, you will see that there's a high volume node here, high volume node there. But today we'll display this. We displayed it yesterday at 9:30. So we got a whole day ahead of both of those things. And then order flow is going to be looking at how real time, mechanically, how real time order is coming in. You're just watching it with no inferences. This is telling you there is going to be some positive like push in the market higher against, or like higher probability of more longing than shorting against this green arrow, because that's where the flow has that potential. And that's kind of why we're different. We look ahead of time, and that's basically it. Leading indicator. So all of our stuff looking forward. Yeah. Happy New Year. Thank you. What's up, LJ? All right. Are we recovering? Are we turning around? Are we selling off? Let's take a look at the news. Market opens in 4 minutes. Yesterday's data was interesting. We talked about the two things that moved the market, the jolts. Jolts came out extremely positive. As you tick up on this with no increase in initial jobless claims, which are people that just get fired. So there's no layoffs going on, but there's job openings that need to get filled in the 30-day window. Jolts are great. So this is a hiring spree, which means companies are hiring quickly. The fears of those jobs lingering and not getting filled are fears of inflation. The market's extremely sensitive to any inflation news right now. So the idea that wages could go back up, people are getting very bad PTSD from COVID. The other thing that hit pretty hard was the services. Oh, let's see where it is. Oh, sorry, the prices, the non-manufacturing prices right here. It was just a big excursionary like data point. This thing was just way out of bounds, and one could say, is that a trend or not? We had a blip back in February, the same thing, and when that blip came out, it's not like the market collapsed or whatever. So I believe this is a blip. I don't think that's a trend of anything. I think it's a single data point based on some localized circumstance that I don't think is a trend. It's not like it's trending higher, but when that blip came out, it kind of toppled the already pressured market to the downside from jolts. So, like, do you believe that that's a bad sign of the economy? I don't, because recessions don't happen when you got companies hiring jobs, right? When you quarter-over-quarter GDP growth is positive and you have job growth. Those are two telltale signs of a not recession. So don't forget, I think that market's closed tomorrow on account of the presidential day of mourning, I think. So today, it's Wednesday. There's really nothing going on except for the minutes right after lunch. So we'll come back for that and take a look at that. Catalyst is active on NASDAQ at 21,287. They give that number. That's my point of no return on NASDAQ tonight trade. Starting out the day, VVIX up in the upper hundreds. It's always a cautionary expansion of volatility. The V's are going to get bigger as you're trading, so drawdown's going to be crazy. I need to find a really solid pivot to trade off of. And we are below overnight dynamic monthly hedge pressure. So this is also downward bearish pressure out the door. Not surprised the market's opening and trying to sell to test that out. See what our liquidity maps get at the door. So I'm going to wait and see what we get. NASDAQ futures already touched DD bottom overnight. We got close to it. We're about a minute in. We get our maps start printing out. Come on, SPY. Here we go. Oh, lovely. Okay. So today, let's just kind of take a caution today where we are. When the market opens flat, resilience is going to need to be a little higher than just 0 to give me some more confidence. Where's my pencil tool at? There it is. All right. So you guys know the drill. Res larger than 0 above there, res less than 0 down there. 80% of days stay on the same side of blue. 90% of days stay on the same side of orange. So today, nice little dip to buy, 20 points lower. That puts us right about 59.20. If I do get that dip, 59.32 is a cat level. So we're going to have to pass through is not sexy as this sounds. Right here is a cat. So, oops. Oh, gosh. Let's make that pink. All right. So I'd be looking to buy dips like literally right on that edge. Nowhere around. Nowhere in between. Resilience is negative, so there is resistance off of that box. So today's move is going to likely be down. I'm not doing anything from here with negative res, so we know how the drill goes here. From here, off of a support, off of resistance. The aggregate shows that the flow through the redistribution zones on all the stocks negative. So push to there. I might be looking for that 80% of days bounce at the bottom right there. So market's going down today. Down, down, down. Is that the one from yesterday? No, I just printed. Open blue open is the scalp, yeah. With the high VVIX, I can expect the volatility to be big and growing. So not a big deal. We're pushing 111 there, and VIX is actually above its contango midpoint, so we're running higher on VIX. Overshoots pivots, giant Vs. So yeah, V would be nice. Nice little V there. Any break of that obviously falls to there, BLU. Any break of this is still bad. Now, greater market, we always talk about, right? Greater market, are we bullish? Greater market. I really need to get my tablet back on. Number one, DD ratio is right on the edge. Keep in mind, it's starting to deteriorate again. Greater than half, stocks are still good. Getting that delta positive longing. Sorry. Delta longing, not delta positive. Greater than half is good. Stocks are all in bull zones. That's really good. Number two, S&P above. Monthly hedge is good. That's on the month scale, monthly hedging against those options. Number three, maps. Let's look at the maps really quick at that 3-month forecast on the S&P. So everything's good again. I don't know if this is the dip to rally the market, but I think the dip to rally the market's coming pretty soon. QQQ just came out, like same as before, where we're trading. When you have bear zone above bull zone, the market is extremely illiquid, and the volatility, that's the range you're trading in. That's what the options are telling you. And as you see right here, that is the range you're kind of trading in. So supports are there, but the market's willing to buy lower lows. And you still have this kind of like bearish, that's kind of the crummy part, right? Ceiling, if you may, on QQQ that goes through February, right? So it's kind of like there is a thing that between now and through February, QQQ may not be crashing because there is some bull accumulation when you have that sloping down there, but there's ceiling. So it's going to be hard to break out of the top. We've seen this on Qs for the last month, which is why every wave up is getting pumped back down, because this is solid resistance. The top of the bear zone, like we always say, is rock solid resistance over time. So between now and the end of February, there is still resistance there in the options landscape. That's the kind of the crummy part for you futures traders. It means, you know, the market's here and volatile probably for longer. Does the platform support alerts? I think there's alerts, like natively. I don't know if we have incorporated them into this platform though. TradingView has native alerts, and so what we white labeled their charts, we might be able to utilize them. But the S&P of all things is actually pretty solid. Despite everything else in the NASDAQ, the S&P is clean and it's like back to bull. So of all things you see, while NASDAQ has a ceiling, the S&P is as bullish as it gets. When the dark gray bottom and the light gray top slope down, that's as bull as you get through February. So as we push through monthly expiration, which is going to be the third Friday here, the beginning of February is just so ultra clean. So it's like the S&P is starting to show signs of turning around. So because of that, you know, I'm not walking in here saying the market's going to crash like a bunch of silly traders out there on social media, or a bunch of, you know, doomsday preppers out there saying the market's going to crash. And it's going to be volatile, it's going to be choppy, but it's going to take some bad events to crash the market. So start listening for news, as the market's extremely sensitive to news right now. The minutes today are going to be very, very, very powerful because we're trading above that key level in VIX, where the market just is sensitive to anything. As we tell you guys, the key level in VIX futures, you want to write it down, is 1637. So this month, the contango midpoint, December to January, goes to 1637. VIX trades above that. VIX futures is above that. Then you're just sensitive to news. What's up, everybody? Don't forget to smash that like button on the screen. So today's setups, right? We want to see a couple of things. I'm going to long on pivots only. I'm going to exploit the idea that there is volatility in the market. Instead of trying to chase something like I'm going to miss out, I'm going to bet that the volatility means that the range is going to expand. So I'm not going to diddle in the middle. I take certain trades every single time. I love to go from here to here. That's one trade I like to do. But in this particular case, chasing along in high volatility is not optimal. I want to see the market dip to a pivot and take along. So the problem today is that QQQ itself, right about here, also just like the S&P, has a catalyst that's active, right? It's a one risk interval off the high before that move happened, not the high, but off of that at that 6 a.m. sell-off that we had. So whenever you move that distance, this is something that our algorithm gives you, some exploitative margin requirements in CME span, which is a program that sets performance bond minimums from clearing firms. It's a fancy word for margin requirement minimums. This guy right here is a very special number that is showing you where structure is in the market. The market breaks that structure on a single run without finding liquidity. We teach you that. We call it a catalyst. Catalyst tends to accelerate the market. A catalyst can create like abnormal effects in the VIX. So because right on the edge, the market literally falls apart here. I'm going to sit out below this pink line. I'm going to long off blue, but I'm going to sit out down here. I'm going to sit out with a vengeance. When we break that pink line, the market's going to continue to sell off. So that's kind of that kind of key point. Actually, is that where it is? Hold on. No, wait. No, it's here. I'm sorry. I drew it at the wrong. I'm looking at my other screen. It's here. It's literally right here. At the bottom of that 7 a.m. candle. Oh, right here. So it's like right on the edge. All right. Yeah, I'm going to sit out with the vengeance below that pink line. Again, I don't play. We are in bear zone. Still pretty good. So the greater market is still 3 out of 3 bullish, right? So the market is going to find a bid somewhere. Let me find a bid somewhere. So right on the edge, this would be a nice place for me to snap along right up to the top. That's good for NASDAQ. S&P, kind of a similar story. Since I know there's volatility, let it sell, right? Let me not be too eager to jump in. Let me let that volatility play out. VIX futures up right at 18.3. VVIX 111. It's just kind of that place. Okay, there's going to be volatility. Let's go. Let's wait for it. What's up, guys? Good morning. Let's let her rip. Again, and the mapper target is always to next resistance on these things. Let me close out my alerts here. As you see, open, blue, open is one of my favorite trades to take. Open, blue, open. So I'm not going to rob myself early by jumping in thinking I'm going to miss out on a trend. The trend will be so let me tell you when I know there's a trend on a breakout. Instead of chasing here, I'm either going to long from here to there, or typically if we break to there, this is a scalp, and then if we resist on there, or we support on there, that's a go. So any 516 reclaim on Qs is good for a run. The music is distracting. All right, I'll turn the music off. It's a streamer thing just to have like no dead air. All right, don't forget, guys, smash that like button. 350 people, 300 some whatever people here. 50 people hitting the like. Thumbs up. I'll turn off the music if everyone hits the thumbs up. Or if you don't, I'm going to turn it on. We're going to play polka jams of the 1910s. You can listen to live accordion music. Nope. Cedric, when an event happens that creates catalyzed movement, it only lasts until Globex closes. All right, so today I'm waiting for a definitive break of 516 on Qs to get going. That's about 80 points higher from here on the NASDAQ. S&P kind of like there is no kind of break point on this to go. S&P, I'm going to get the dip at hedge pressures and take it. And that's basically it. So as you see in futures, the market's just, chopping around right here. I've got about maybe 17 points lower on S&P futures. I don't long anywhere except for where I got my pivots. So 33, 20 something. So S&P has a couple places that can pivot. The bottom DD band is one of them. Your hedge pressure is there. So I'm going to let this guy move its way lower and then make a decision. It's great that my tools are so good at not jumping in, not buying these dips. I know what's in front of us. This white line balancing at 0. The market's likely going to float around its open price and not pick up a lot of momentum to break through the close, to fill that gap and go. You really need a strong resilience below 0 right now. It means all the stocks, the flow is down. Pick up any major stock. It's going to be in the lower half if it's a redistribution zone. The redistribution zone, now Tesla's looking good of all the stocks out there. I'm trying to find some that aren't. Redistribution zone is the space between the open and close price, where the two order imbalances from the MOO and MOC take place. We call it redistribution zone, where the dealer takes opposing positions at open and close. Inside of here is a very important part. Now watching NVIDIA pick up some steam. That's really good. Nasdaq is literally mirroring NVIDIA today. You will see that. Looking at big tech. Yeah, tech is looking surprisingly strong. It's good. To the spider tracker and see what we got. Good morning, friends. I love y'all. All right. But just those tech stocks, on all the tech stocks. Energy's doing good. Healthcare is doing good. Today's Wednesday. We have the EIA numbers with oil coming out in about 15 minutes. So that's going to move oil around a little bit. But other than that, everything is just red and slightly down, with the exception of the handful of stocks I looked at. Apparently these are the green ones, or the greenish ones. So big tech trying to make a push, but the majority of the market not looking so good. Like flux down here, so boo-hoo. Very still wonky today. Not nice, not clean. On positive res, S&P does have an open break. If we run past open and go on res greater than 0, the S&P is likely to go. What I like to do in here is, instead of dealing with possible, there's about 17 points of drawdown on S&P futures, which I'm going to probably trade that today. Nasdaq is, I guess, the stronger one. They both have opportunities right at the same spot. I don't like to just grab a dip with fear of missing out. I want to get that drawn. I'm going to get a perfect trade right on the edge. Oh, yeah. So my cold started coming back. It sucks. Like 2-3 nights ago, I went to bed and I woke up with a crazy sore throat. We had this huge freeze going on, right? And I'm sure, because in Texas, if it's cold here, because we're a bunch of pussies when it's cold, when it's like 40 degrees, we're all like, oh my God, it's so cold. If it's cold here, it's freezing where every one of you are as well, unless you're at the equator. So if it's cold here, I know it's cold where you guys are all at, because it's not getting, and everywhere else in the world is not hotter than here in Texas. So whenever that cold weather started hitting, I was really sick for like a month. I had the worst flu. I was hospitalized. It was so bad. And then now I got my throat was hurting. I woke up, IDOC, her throat was hurting too. She's in California for a week, but we're both just waking up, calling each other. Oh, your city's on fire. Yeah, IDOC is in your city, by the way. So she flew over the fires in LA, and the plane, she was like, they looked out the window and they could see all the smoke, and the plane, you could visibly see the smoke out of the window, and they started smelling the smoke in the plane, and everyone on the plane was freaking out. They had to divert and fly around it and everything. They got pictures and everything. It's crazy. She's like, she touches down. She calls me. She's like, oh my God, I was like panicking. It was crazy. We could smell smoke on the plane. There was fire everywhere. We had to fly around it. So, that plane's not that air. It's not apparently not airtight. I don't have any. I'll have to ask her for some pics. Yeah, it'd be kind of interesting to see from above. All right, so today the only chase long is from here. The only pivot long is from here. Below here, there's a cat. I'm going to sit out with the vengeance below purple. So basically, you guys know me. I don't diddle in the middle. Market's chopping around. I know that. I only trade at high volume nodes, and we can predict where those nodes are going to be, right? So do me a favor, everybody in the stream, move your mouse to here, bottom right. I told you if there's not 150 likes, we're gonna put some music on. We're gonna listen to polka jams. Y'all didn't listen to me. Whoever told me to turn the music down and said thank you, you need to tell everyone else to like the stream. Polka hits of the 1910s. Polka classics. Let's go. Polka, 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 polka. You must remember from Home Alone. John Candy. All right, y'all got. I mean, I don't dislike polka music. I'm definitely reminds me of Oktoberfest. You know, I kind of want to get drunk. And, I'm sure you guys would like this better than the fucking random crap EDM music that puts on. Just reminds me of like sitting in a beer hall, getting drunk. All right, seriously though, everyone hit that like button. You gotta hit the engagement algo. Come on, we exploit algos over here in Rocket Scooter, so should we in YouTube. It does definitely sound like Oktoberfest. Hit that like button, you lazy bumps, you trading degens. You know what I wish we could do? I wish that we had unlimited ability to just stream whatever we want without copyright. Because I'd love to have some fun of it. You know what I like doing? I used to do this a long time ago. Back before I cared. Back before we got like a big following. I used to do like Name That Tune. And we would do like Name That Tune movie edition. And I'd play like, you know, like the opening bit to something. And everyone in chat would guess. And then we'd get out prizes and stuff. Now, if you play like 10 seconds of a song, the AI is like, demonetize this channel. Don't give them any more impressions. You're late. What did you miss? Did the fires make you late? Hey, everybody's asking, do you have any cool pictures of the fires? I think you told me that Jenny took some, right? Tell everybody your story. Recount your story for the masses here. So her and her friend are on a little. She's on a work trip. Her company loves to fly her all over the place for work, and I always call it a work trip because they give them so much free time to just do extra stuff. So they're like, yeah, they're gonna work for the couple of days, but then they're gonna be like beach and all kind of other fun stuff. Yeah, you hit that boom, hit that eval. Let's go, baby. All right. So again, in here, not anywhere where I want to be trading. Right, nice flat choppy. I'm avoiding all of this. Silly. I usually take this trade every single time. Once I get not a terrible line up there. If I do take a little bit of a long, put some couple minis on the table, maybe just one. How about just one? Just one on that break. Nothing big. I'm going to take a small gamble long on this. On this one, on monthly hedge break. And I'm going to take that bear zone, bull zone push here to here. It's roughly 40 points off of this dip right here. So I'm going to tap on one. And if it sells off, it's no big deal. Like if it does sell, then I'm going to just cut it out. I'm literally tapping it in just one account. And again, I'm not expecting it to win. But if the market does fly out, I'm going to go and touch it. So nothing crazy. Nothing crazy at all. One account. That's it. Just one. And that's a huge amount of drawdown. So it like, why? Okay. Well, this is weird because my candles are frozen. That's okay. That's not where we are. Okay. Well, that was not. Okay, let me refresh my platform really quick. My candles are frozen, so that was a okay. Well, that was a decision based on bad intel. Okay, let me close that out. Fuck that. So my candles were frozen. That was really weird. I disconnected from the platform. Okay. Technical error on that one. Yeah, I looked and it looked like it was breaking through and I didn't have, anyways. Okay. Okay, close that out. Screw that one. Let me let it pull back. All right, we are at the catalyst area on the S&P. No, it just today I was disconnected from the platform. So that's just an error on my part. All right, let's let this guy move. The S&P futures catalyst line right here is at 59.32. That is the edge of here. All right. I'll let that guy. This is it. So this is the bad area. This is the auto sit out for me. Okay. Yeah, so it looked like it was just stabilizing, but apparently there was a red candle for me. I didn't even see it. So 59.32 is that bottom there on that cat. So today's just not the best the best setup. So right here is that edge. You see on VIX here. Anytime you can see a VIX pivot, the market can likely turn. So VIX here pulling back, there can be a bounce. It's just gonna be, where can I get a good entry? All right. NASDAQ and S&P are both on that edge there. Actually, today with it being so crazy, let me just trade micros. Yesterday was a pretty good day, right? It's almost 20K a day yesterday. I'm in no hurry to waste money today. Oh, that is true. Yeah, DD ratio. Now we're losing that. So market is still battling today. It's not looking good, you guys. Not looking good at all. No trades. Nothing. Nothing yet. Let's just let this deteriorate. One scalp that I do take, which is why I did tap it just with one contract, but it moved super quick. And I'm going to kind of, this is why volatility is kind of, so in my, 20 Apex accounts, I just traded one time in that one account. So from here to here is a long I do always take. But it is just it's just like too nightmarishly choppy today. R2I could be a setup. News in the hour. We do have news coming out today. Nothing big though until later. Yeah, today's not today's not a great trading day. A little tiny bit wholesale inventories, 9:30 for EIA numbers, and then minutes are going to be really what you care about today. The market's going to be extremely sensitive to those minutes, so everybody's looking to see what happened. The distribution on the dot plot was different than normal, right? Remember last year, leading up into the election, we all know that the Fed was padding the numbers, or what they wanted to do to make, market hope look good leading into the election. There's always this kind of like corruption up in the upper tiers. So, the dot plot suggested that the Fed was capable and willing as a unanimous group to cut rates a lot more aggressively. There were 4 estimated rate cuts of 25 each by the dot plot on the long term. So basically that was to put us closer to the low threes on the Fed funds rate. And that was what was leading up into last Fed meeting before the election. Then after the election, the rug was pulled, and all of a sudden you see the dot plot is split differently. And the dot plot is the distribution around the member votes. If you guys remember, you see, like, if you look at the thing, it comes out whenever the announcement comes out. You see like a bunch of dots, distributed around the rate. And the mean of all of those dots before the election was like way up here. And then after the election, it was so strange. And this is why we crashed. It was like divided. It's like half of the members were like, oh, psych. I'm sorry. Half the members were like, I'm sorry. I drew this backwards. I'm standing on my head here. The weight was at the bottom. Like most of the members were like, yep, we're all going to cut rates like very aggressively in the next 3 to 5 years. And then after the election, a bunch of them were like, psych, we were just kidding. We actually don't think we should do anything at all. Literally, like, and the dot plot was split in half down the middle. And that divergence, that dissent amongst the Fed committee members, that this became, instead of being like most people want 1 full basis point, it said half of the people only want 50 basis points, and the other here, and the other half don't want anything else. Period. No change. It was like, whoa, wait a minute. The Fed was, showing a very lenient hand and very eager to cut rates as a committee together. And then somehow after the election, most of them are like, my long-term outlook is that we don't need to do much. And the market was extremely mad at that idea. And again, some of my friends that are higher ups in different investment banks and stuff, they started talking about the corruption part of things. Were some of these committee members trying to make the stock market look good leading into the election because they're batting for the Democrats. And it's like, Wall Street always has those theorists that come up with that cool stuff. And I mean, when putting against it, we all know that Moody's and some other, firms that do ratings were rating mortgage bonds incorrectly back in 2005. Created the last crisis due to corruption and being paid off and stuff. So you can't put it past people for acting and serving their own self-political interests. But then again, we don't wear tinfoil hats here. But I wouldn't put it against them. Why such a drastic change, in your opinion, before and after the election? Makes no sense. As Wall Street was expecting at least a full 1% basis point cut. And although Fed funds rate is not necessarily going to curb the kind of inflation we experience now, the kind of inflation we experience now is a fallout from COVID. A lot of its mechanics are built in what is called cost push inflation, where the cost of labor is high and raw materials high and things like that. Cost of production is high, and it's reflected in prices. It's not a lot of handles the Fed can do. They can stimulate and destimulate lending in banks and stuff, direct money flow from banks to you. You have more money in your pocket, you're more likely to spend. The more stuff you buy, can directly affect inflation. But the Fed doesn't have much of a handle for the kind of inflation we have right now. It's not created by the mechanism that the Fed can control. And that's what I think Wall Street and a bunch of retail traders need to understand. With the Fed can't change interest rates, Fed funds rate, to affect wages. And companies going to pay wages because they got to cover their overhead. The Fed funds rate has very little to do with that choice. So some things and prices of things are due to supply and demand availability. A lot of things that the Fed, that Wall Street is trying to credit the Fed for doing, or getting pissed off when they don't do, it's not necessarily going to fix the inflation problem. When COVID happened and the globe shut everything down, what I said to everybody was that this is 10 years of problems for this country and for the world. We have 10 years of inflation, if not more, possible recessions along the way, and there's nothing anybody can do but wait it out, because the mechanics that support this type of inflation are only healed, the mechanics behind this type of inflation are only healed by job growth and economic growth, natural demand growth exceeding supply. So it looks like we're getting that nice little bump up to that area I want to see. Let's see if we can reclaim 516 and go. Now, you guys know that when this ratio is less than half, the market is very, very, very not likely to break bullish. From here to here, I'm not going to chase a trade on this one. The greater markets slip back to the stocks being bearish. So, is there a reason why streamers don't show their account numbers like Alpine, Nutty Bar? I've never heard of any of these guys. Who are these people? It's to not show how many accounts they bought. They don't show account numbers. I don't know what platform you're using, but some platforms don't have account numbers. Is that every single time? It's just too choppy. I don't want to trade this until I get a nice defining break. Something about this market today. No, I don't know. Strong Island, who are those guys? I don't know who they are. They must probably like newer, smaller or something. I'm gonna tell you, most of the traders out there, influencers and streamers, are dog shit traders. Not saying they are. I've never heard of those two people you mentioned, but they don't like the majority of streamers are absolute average at best, mostly garbage traders. They're not good. Then we'll show you their performance history and they'll show you your account history, things like that. I did a challenge for 1 year, and I went on like a 70-day win streak on this challenge. And I showed it was in a real trading account when I'm trading, not my live elite account or my Apex account. Like I'll show my trade of 8, full statement balance, everything in my real account. So some people do, I do, but I have, performance that I like to share. Anybody that's not showing you anything beyond that is just not good at trading. That's it. They don't want you to see that they're bad. I've been in this business long enough. I was one of the first live streaming YouTubers in futures trading. Tracer Matt and me were the first 2 in the world, and Patrick Weiland were the first 3 in the world doing this on YouTube. We've been streaming since 2016. I have. So like it's during COVID, I saw the birth of like 1 million influencer gurus show up that all after like 2 or 3 months in a trade room, all of a sudden want to, start trading and start streaming and start showing their shit. Now with the prop firm explosion, 99% of these dudes are fucking paper trading on stream and blowing up eval accounts. And yeah, they hide everything because they don't want you to see how bad they are. That's it. There's no other alternative. I've heard every excuse in the world as long as I've been doing this. I've been trading since 2010. I mean, you may not see it, but I'm in my 40s. Okay, so I'm an older guy. But all these kids doing it, they're not going to show you their performance. That's it. Every excuse to not do it is the one fact. If you were good at trading, you would show everybody how good you are at trading. No better way to build a business than show every people that you fucking slay at your job. It's like being an artist. It's like being a wedding photographer, and they're like, "You want to do my wedding? Yeah, sure. Well, can you show me what your portfolio?" Ooh, I'm not showing you my portfolio. Got to hire me on word alone. Oh, you're gonna have good luck with hiring that person and take your wedding photos. So like me, I tweet the statements. I tweet my bank deposits. I mean, I go extreme on Twitter to show everybody like what I do. So there's a lot of kids out there just don't. Like I said, I don't know that. I've never heard of these dudes. Who's Nutty Bar? That's the actual name of the dude. I don't know. Like a stream name or something. How would I describe the platform I'm selling? It's a trading platform. So the platform that we made is a trading platform similar to TradingView. We white labeled TradingView for their charts and we built around it. It is retail trading's very first risk management focused trading platform. It utilizes newer techniques and technical analysis to give traders additional information about the markets as a second layer to that kind of stuff. You said Matt made 20K yesterday. It was, closer to 18. Something like that. So, and the day before I lost, like, what was it, 7 or 8? Today I lost, 1,500, whatever that one was. So, so as a trader, most trading platforms are the same thing rehashed. It's technical analysis, type indicators, the same stuff. It's the same suite of tools across the board. So our platform is entirely new tools, and most of them are based on volume prediction instead of price action. And that's the main difference. Volume prediction is predicting high volume. And I tell you guys, I can teach you a trick, and I love doing this, but give me, and I love playing this game, give me 20 tickers. Give me literally 20 random tickers, 20, and I'll do all 20. And every single time I'll show you that our areas of interest will produce high volume when you touch them, and volume spikes relative to where you're trading. Spike, spike, spike is bear zone, bull zone, tap. 100% accuracy, and it will never fail, is you can use options to predict volume. What does that do for you as a trader? It allows you to see where the market has key interest. If the market dips and I long the market, I need volume to come behind me to push the market higher. So if I can find where volume can be, I have a higher probability of picking the pivot that matters. So everyone type in a ticker. I'm telling you, especially if you're new here. If you're new here, type in 5. I always tell people, like the majority of trading gurus out there love to show you their favorite chart of when their indicators lined up and worked out after the fact. I tell you guys, I'm the only person that claims 100% success in this experiment, not trading, but in this experiment. So I tell you to throw 20 random tickers at me. You pick it and I'll do it live on stream. I convert so many naysayers in a heartbeat. I will show you where guaranteed volume is going to be. So what it does is it narrows down all my choices of trading to just a few key areas. So in risk management, I've got pivots here, here, and here, and that's the only places I care about today. Everything else is noise. I tried to take the long from here to here, which actually did play out, but I got squeezed before it happened. But you can see that that is the area of interest, right, to trade from. So the idea is I can actually avoid a lot of the noise, right? Okay. I love this game. It's so much fun. Okay. So anytime, so the idea is that most trading platforms lack actionability or most analysis points. A lot of people use like GEX and a bunch of there's a lot of this goofy stuff out there. Try to forecast what's going on in the market. And the idea is that these things are just noise. It's all not actionable. So the idea that I can narrow down the market into actionable pivots is very important. Now, 2 key pieces of information on here is that number 1, bull zone bottom is one of the strongest pivots you have. As you see, as we approach it, in hedge pressure, there's volume. So the volume starts to amp up right here. Hedge pressure, that's the highest volume here. And then as you fall and you bounce here, there's, I guess, relative. Let's kind of zoom over so you can see it. You can't argue with the pivot on hedge pressure is the highest volume on spike. As you hit bottom of bull zone, again, there's more volume and et cetera. So the volume is amplified here. If I care to trade, that's the spot I'm looking for. There is flow pressure that is positive longing from that blue. From that blue, you're seeing that pressure that's going with it. Okay. NEM. So essentially, the blue-orange lines and those zone boundaries, we don't have a calculation for this one. So, oh wait, we do. Hold on. So an example is today, I would say, what would I do today on this particular stock? Well, it's kind of floating in the middle. I'm not near any of my high volume pivots. I could take a long here at the open as there's pressure this way, as the guide off to the right for this particular map tells me there's pressure off of blue, but there's resistance off of orange, okay? So the 2 different flows are pushing towards each other. It should be no surprise to you that you're sitting there right in the middle. So the idea that I know that, it means this isn't a dip to buy because I've got pressure pushing down. But a good move on this stock is if I break through here, then there's a big run up. So I'm just waiting to see something move. So not diddling in the middle on this guy, right? So I love showing these. So there is no actionable pivots on this one. If you pass through this one or pass through this one, you'll see a big volume spike though. SPCE, okay. Without fail, each one of these pivots, penny stocks usually don't have weekly options, so we can't formulate a math. Kodak, okay. So if we don't have enough information, or it's like I said, sometimes stocks less than $10 don't have enough data or even options in general to run a map. We need weekly options. So those don't qualify for the exam. Rig, Transocean. And some of them do. So this one actually has. For, at some point, I remember one point in time in 2015, I don't know if you guys know this, that this was the most shorted stock on the planet during the oil collapse in the mid 2010s, believe it or not. Highest open short interest of any stock was this one right here. Again, in between the pivots, It's hugging the middle, no high volume yet. So nothing's really kind of passed through or created any movement here. So we haven't touched them. But the idea is, what I'm saying is, anytime you touch one of these pivots, it's going to be guaranteed high volume. Secondly, is that you're going to see that there's the flow path off to the right. All things being equal, the market just tends to stay the same without an event. And today, anything below this orange, you can see there's just pressure pointing down. And anything below this orange, there's just pressure pointing down. There's no long pivots below here, so I'm not buying the dip on this thing. I'm not fighting the flow. If I break here on SoFi, it's a long setup because I'll chase that break on orange. So if for some reason this moseys up to there and breaks through there, you're going to see a huge volume spike like this, and then I'll chase along on that gamma break, that gamma push on 15. But now I know 15 is like the key important pivot, right? Okay. So again, nothing here. And again, Tesla, just like everything else, is also floating between hedge pressures. Nothing's really getting definitive breakout move. And again, there's no high volume pivots nearby. Not a good experiment today because none of them touched our pivots, right? So the market's just floating in between stuff. And I, like I said, not chasing longs, not chasing short. Here's the pivot in the S&P. This is the one decision I have to make. Do I want to long the market here? That's the big question. Do I want to take hedge pressure? Boy, oh boy. No, because the catalyst is active. All right, so I've chosen to sit out. We're going to let it fall. Let's let her rip. Cat is active. Let everybody in Discord know. Well, I suggested a mindset course and buy the platform. It's up to you. The mindset course is a very crucial part of what we do. We training on the method and style of this. So ideally, like identifying high volume pivots and flow paths using options is a whole different style of layer to what you do. It's good to have the platform to play around with it while you're going through the classes. That's not being said to convince you to buy both. It's just, it's like you can learn about the tool or you can learn about the tool while you have the tool. That's up to you if you want to take that. Most people who buy the class come back to me and say, I want to get the platform. Can you refund the class? And I can buy the platform and the class together. Very few people that buy the class on its own just do the class on its own. After 2 or 3 classes, they're usually like, okay, let me give this a month. So if you're ultimately going to do it, it's better just to do the whole thing together. Cat active 5932. Yep. That is the level. 21,287 NASDAQ. Hey, I'm going to tell you guys something. Y'all hate the YouTube delay, right? Y'all remember how much we love Zoom? Well, here's the thing, right? We don't run a luxury charity here. As much as I love you guys, we're trying to grow our business, right? We're going to do a Zoom call. So we used to do Zoom calls in the morning and the afternoon. The afternoon is training Zoom call. The morning is just to get rid of the delay. And I told people, sure, I'll stream in both places and split the community in half under one circumstance, that you guys leave the YouTube open every day. And everybody come in and leave a comment. Say like, hey, what's up or whatever. You know, get the algos going. And, you know, the last Zoom call, hundreds of people in that Zoom call, we had 13% participation. And now people are like, well, why'd you get rid of the Zoom call? And I said, well, this is it. So what I'm gonna do is I'm gonna give you, I said this in chat and I love you guys. I'm gonna give you all a whole month without Zoom now because I got tired of asking. And then you guys see how much y'all hate the YouTube delay. And then we'll try Zoom one more time and hopefully it'll be closer to 100%. It's about 8 seconds. YouTube's kind of shitty with that. You can't get rid of it and that's just a YouTube thing. But yeah, like, you know, it's like, can you guys be in both places? You know, the YouTube algorithm's a little confused when we have 400 people, then 150, then 250, then 400, and 300. YouTube is like, is this guy's content any good? Should we show this to new people? So it's like, all right, we'll do Zoom for the members to get out of the delay, but you got to go to YouTube. And I think people are just getting lazy. So I have this rule when it comes to leading a community, and we work together. And I'm a leader and a trainer and a teacher. So we run as a community. I will be as lazy as the laziest member. If you guys want to walk, I'll walk. If you guys want to crawl, I'll crawl. If you guys don't want to be in YouTube, then I don't want to be in Zoom. So maybe we'll motivate people this way. See, life, like training and trading, is about trading a mindset. Regiment. You get up to the same thing every day. If you can't remember to do that, you're not going to remember your trading strategy when shit hits the fan. It's a life lesson, boys. You wake up and you be regimented and you do the same practice every single day in your trading. If you can't click a fucking button for 2 seconds, in 87% of people were not consistent with that. We were watching. It's a life lesson. You can't be good at trading if you can't wake up. If you make your bed every day, do a consistent action to teach yourself discipline. If you lack discipline, there's no hope for you in this world. So, yeah. So, Gary never went to the morning Zoom. I love the morning Zoom, but it sucks because everyone's in two different places. Like, we're having conversation there, conversation here. It's like, I hate that. I like having everybody in one place. So, but I said, we'll do it as a luxury if you guys can still be in both places, like chat and YouTube. And if you want to just see, you know, the Zoom just to get ahead of the delay. But some of you were consistent, which I thank you for. But we're going to do a little growth spurt in YouTube, and we got to maintain the momentum there. Yep. You must be disciplined. Wake up. I tell people, if you need discipline, if you fight with this in life, there's two really good things you can do for discipline. I'm going to tell you something. This is a really good lesson, and I love teaching people this one. So I'm choosing to sit out with the catalyst is active. Again, just like yesterday. I'm going to do very, 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 very little. 1 second. Okay, 10, 20. If you lack discipline, let me teach you something. The next high volume pivot today is 59.13 on the S&P. Again, I'm not touching this. Bottom DD band on NASDAQ is also high volume pivot right on the edge here. But again, NASDAQ catalyst is active today on NASDAQ. 21,287 here. So automatic sit out on that as well. So 21,218 is a high volume pivot. Now, okay, if you struggle with discipline, let me teach you something cool. Discipline is not something you can be taught. Discipline is something that you need. You need to have repeatable behaviors that you do without question, without reminder. Motivation must be 100% self-motivation. To give yourself discipline in trading, a lot of people think I just need discipline in trading, and you're going to wake up and start being disciplined tomorrow. I will tell you, the hardest thing in the world to do is just wake up and go, gee golly, I'm just going to be disciplined today. If that's the case, the military wouldn't have boot camp. The reason boot camp exists in the military is to break a bunch of people's individual spirit and then remold them as a unit. Because in the world, in combat, you and your unit are a team that is responsible not only for the mission and the goals of your squad, but also for each other and each other's lives. You are useless as an individual in the military. You are not Rambo, and you're not going to go out there and take out the enemy by yourself. As a team, you succeed. And so the idea of boot camp is to literally break you down and force out any kind of individual deviation from the herd and make you operate efficiently as a unit and force you into discipline. Because people just don't wake up and go, you know what, I'm going to start behaving better today. Nobody has that strength to just change their habits on the dime. You know, you go to like seminars and things to reshape your mind and reshape your focus. These seminars are designed to mentally exhaust you and break you down so you're susceptible to change. Discipline is almost very rarely taught and very rarely acquired. I read a trading book that said, I need some discipline, so I'm going to apply it tomorrow. Bullshit, you're not going to do a fucking thing tomorrow. You're going to wake up the still same lazy piece of shit you already are. You're going to do anything. You don't wake up motivated after a book and decide to discipline yourself. Discipline is learned in the school of hard knocks in life. You will learn the hard way to be disciplined. You need to practice something to even give yourself the ability to be disciplined. So I tell people, how do you stop being a degenerate in the market, losing your fucking family's money gambling away here because you need discipline? Here's what you do. You start creating things in your life to discipline yourself. Literally. A small task that's repeatable without question that you wake up and you do because you know it is a stepping stone to a bigger path of greater discipline in your life. Pick a couple things. I've got 2 really good things you can do that are amazing. One of the ideas that I tell everybody, because this also serves society, is that every time you go to the grocery store, without question, I don't care if it's raining, I don't care if it's snowing, I don't care if there's a fucking woolly mammoth chasing you in the fucking parking lot, you will push your shopping cart back to where it goes and you will leave it there for the next person to grab. And there's a whole thing, I always love telling the shopping cart metaphor. Why do you do that? Well, it benefits the next person behind you. You're just doing a good deed, and there's like no reward for it. Nobody pays you for it, and like there's no punishment if you don't do it, but you're doing the right thing. And it's a consistent act that no matter what you're experiencing, you just go ahead and do the right thing. And it's a behavioral habit that you're trying to acquire in your daily activities, and something you do every day. It's a mind thing. So if you're religious, right, pray at the same time every day. A lot of devout religious folks are very consistent, right, with their religious practices. Pray at the same time, the number of times a day. I mean, it's very much like that discipline is practiced at an early age. So it's not like you have to train yourself to do these things. Without question, it doesn't matter. Okay? And so the idea is that the shopping cart is a great idea because it's a small task that benefits society. You don't think about what it does, but you might have saved some little old lady from chasing a free shopping cart out in the parking lot. Maybe she got hit by a car. You wouldn't know the trickle-down effect of a tiny little good deed, but it is discipline. And without fail, iDoc Talk and I practice that every day. We always make sure that the shopping cart's taken back. It's something we do religiously. Another thing, and again, this was taken from a commencement speech. We've all seen the TikTok of this one where the guy says, you want to do something good for yourself, wake up and make your bed. And that's a great idea too. Wake up and make your bed. It's something that benefits you because when you go to bed at night, it just feels slightly better. So you actually do benefit from that. But without question, don't be like, oh, I'm in too big of a hurry. Be an extra minute late to work to do that. You do the same thing every day, every day, every day. It's a mindset change. You get in the habit of falling in line, applying yourself with the same regimented practices, and it becomes easier to apply a trading strategy because it requires no deviation whatsoever. I don't care if it's raining, snowing, I can see lightning hitting the park. I'm going to take the shopping cart back. I don't care what the market looks like. Below this pink line, I am not trading. I don't care how many people come in the stream. They're like, do you even trade? Are you going to trade? No pressure in the world is going to force me to do anything against my discipline because I'm so fucking good at what I do for a living. Because I've been practicing discipline not only in my life, but in the stock market as well. Now it takes many, 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 many years, if this is all you do to get discipline, to even acquire it. Discipline requires consistency and repeatability. A lot of you aren't consistent in your application. You use different indicators every other day. You don't have a consistent approach. You have to mold your discipline around a consistent approach, which is why choosing a task like the shopping cart or making your bed or waking up and kissing your significant other goodbye before they go to work. Do the same thing all day, every day. You know who has discipline? The eye doctor who makes me eggs every single morning without fail, to the degree that you guys even meme me for it. Matt, go get your eggs. We both talk to each other about how important it is in life to discipline yourself to achieve the things you want to do. If you wake up and you're inconsistent, then not only does your partner lose faith in you and your ability to provide or whatever it is they promise you, but also you lose faith in yourself. And you start to question yourself and doubt yourself. I don't doubt myself one bit. I'm the best trader you'll probably watch on YouTube. I'm not the best trader in the world, but on YouTube, I'll smoke all these influencers in a heartbeat. So why? It's because I do have such consistent application of what I do. It is to a fault, discipline to the core. Nothing can shake me into a trade right here. No amount of candle, no amount of market, no amount of you guys, no amount of influencers heckling, trolls heckling, make me deviate from my discipline. And I win because of that. So discipline is how to give yourself the ability to, without question, apply yourself to something. Task, doesn't matter. Discipline is like a code, behavior. It's like an honor system, like a code. Like you, no matter what, you're devout to it, right? So if you want it, number 3, if you want a disciplinary tactic, be here at 9:15 every morning if you watch the stream. Not 9:17, not 9:20, not 9:30. I don't care what it is. You be here at 9:15 without question. That's a task. Click the thumbs up before the stream starts. That's a task. Write it down. I'm going to do this, this, and this every day. And every day, when you make yourself inconvenienced to do that task, you're not going to feel it until the first day. You're like, oh crap, I'm running late. Oh crap, I have to do this. Nope, I have to do my discipline. I have to do this task every day. And you're like, you run, you get it done. Okay, I got to get it done. Okay, phew. That feeling is what shapes you. Inconveniencing yourself to do the task at the time when it's inconvenient. Like returning the shopping cart's nothing. But when it's thunderstorming out there and you go, you know what? All right, let's do it. Run through the rain, let's go, and then return it. It's that moment in time is when you go to your car and you're proud of yourself. It's not every other time. Not when you're sitting there and just doing it every day. It's when you're like, you know what? I could have not done it, and nobody would have known. I could have cheated my system. Nobody would have known. But when you did it when it was raining, you sit in your car and you feel different. That's where the magic kicks in. And then you start to crave that feeling. And then as you find out in trading, the more you apply yourself with discipline on a repeatable trading style that works for you, you feel like you actually have some sense of control over the market. I never trade out when a cat is active. Never. Not once. I'll never touch the market. I don't care what you tell me. I sit out right here. It's okay right here. Okay, market is back to okay. Now where can I make a trade? I don't say, you know what? It looks like it's going to rally. Let me jump in on this. Without question. Because once you're disciplined, the magic happens is when you're finally achieved that pinnacle of being disciplined, you feel uncomfortable when you break what you're supposed to be doing. You feel off. Like once you're at the peak amount of shopping cart returnedness, the day that you don't do it, you feel weird. And you get home, you're like, oh, I didn't do it. Okay. And you run back to the store just to grab a random one to return it, to reset yourself to feel okay. That's when you're done. That's when you've trained yourself. I would feel so weird deviating. Okay. So the idea is that when you finally achieved your trading goals of being disciplined, this isn't like, hokey pokey feel good guru shit from a book that tries to make you feel like, don't worry guys, just wake up tomorrow and apply risk management. You're like, you know what? Gee golly, I'm going to do some risk management tomorrow. I haven't been doing that. I'm going to do it tomorrow. I'm finally start winning. You have no idea what that even means. You can't just, I'm going to wake up tomorrow and be disciplined, guys. The only time you know you're not disciplined is when you choose to not do the task because it's inconvenient to you. And if you can still have the ability to do that, which I no longer have the ability to do that, but if you still have the ability to do that, you're never going to succeed at trading. You're going to blow up your shit all day long, every which way. You're going to do good for a month and blow it all up in a day, because that's when you realize you didn't have the discipline. So if you can't return the shopping cart in the rain, you can't pull the plug on a bad trade. You ain't there yet. So wake up, do a small task. If you can't click a button on YouTube, I'm sorry, you're going to fail as a trader. You don't possess the discipline someone like I have, someone like me has, to apply myself consistently if you can't do little tasks consistently yourself. Just FYI. What's funny is that Nate said this is the best trading you've seen in only here 2 days, and you've really just seen me kind of choose to sit out, which is kind of cool. You haven't even seen me do much. Today was an error. I longed on a bad candle when it was still falling. But yeah. Okay. It'd be nice to have an alert. Well, you can set an alert in any platform. We don't have alerts yet. I mean, we're a newer platform. We released in 2022. I haven't built all the features in the world yet. I'd like to have alerts too. It'd be kind of nice. Yeah. Okay. Market's back to normal. Let's take a look. Like I said, I need to be above some of these levels here. You said, what number did you get? 21 through 29? Make sure you're using the correct risk interval. Hold on. Like I said, market's going nowhere. I don't have a really clean day. Well, there is bullish pressure off a hedge right here. I still don't like it. I still don't feel like taking it. Liquidity map does have that pressure that pushes back to open. Blue open is always a trade. But still, this number negative goes this way. I don't have a clear picture of the market. I feel like I would just be gambling on the direction if I pick something. The advice is awesome. Oh, like the middle part. Well, I'm glad you like it. Like our classes, I tell people this. Our classes, there's a reason people give praise to the classes. I would say it's not the material. I think it's how we teach that really gets people's attention. I used to teach at University of Houston, by the way. Chemical engineering classes. So I even applied myself to that to make it like memorable. It's not, I wouldn't teach people, I'd train people. I always felt that same way. I always would ask questions like to peg, like people's brains, like with like quizzing them, like trying to guide them to realize the answer themselves instead of like handing it over. But if you go to Rocket Place, read the reviews, there's just like, I don't know, there's a flavor of review here. And I think the majority of people say something like completely different than anything out there. The best these are actual people. And this is actually what they bought. So I don't reward people for leaving reviews. These are all honest reviews from clients. You'll never see the market the same way again. Cannot recommend this enough. Like there's absolutely nothing like this. I mean, people, and I'm like, what is it that we have? We have all 5-star reviews, and it's a very special experience people have going through our program. What is it that we do that's different? And I think it's because we invest the time into training, giving you like a regimen. It's a practice. Our classes are very similar. It's not just here's the information, good luck. Classes it's like how we train. You go through somewhat of a boot camp in our 20-day class. It's truly revolutionary. I mean, people say some really neat things. It really makes me happy to see this. But it makes me happy to see that like we're almost like a spiritual guide to people in a way. People wake up and say like, I think differently after going through these classes. I never look at the market the same way again. The most information dense trading instruction I've ever seen. Like this is Neat stuff. Again, these are actual people you see in the chat. It takes a lot of very complicated market concepts to present them in clean visuals. Very nice. Whole different way of trading, easy to learn. Absolutely mind-blowing. Like, people are neat. Are very, very kind to our approach. Unique approach. So, I mean, you can read. They go on for a while. Is there a transparent roadmap for the platform? Like, we don't have something like that published. We have one internal within the company. But like I said, we're a much smaller company than Top Step, you know, like we don't have all the personnel to do all the things that we want, like even like a PR department to go out there and that would be lovely to have. You know, we're building our house one brick at a time. I'm sure there'll be a stage where we have, you know, 50 to 100 employees and we'll have all of these things. Right now, we're still kind of like a garage band, you know, like just under 20 employees, you know. So we don't have all the amazing parts in place to kind of support that kind of, you know, that kind of thing. And I do have a transparent roadmap between myself and the developers, for sure. As far as like publications and reaching everybody, that's something we're trying to build now, like ways to communicate and information out to people. And so, like, we just created an email list that connects to the marketplace where I can actually create email campaigns to actually publish this to everybody. And we just released that like a week ago. So, whenever I use any trading bot and what's my view on it, I don't use any trading bots to automate trading. Most of them are depends on what they are. If they're based on price action, technical analysis, the trading bot will fail for obvious reasons. I teach a class on the mathematics of candles. I've taught it before. It's a bonus class to like our teaching. But candles, like the discrete mathematics of candle charts, are by design are the reason, even if the indicators themselves worked, by design, what you see on a historic chart never matches what you get in live trading, live practice, because of the way candles work. Unless you fixate your entry point at exactly the open price or close price of the candle, the performance, some means you execute only on 1 minute chart or whatever every 60 seconds is the only time you're allowed to execute. Then it's the only time the performance will even match the backtest to begin with. There are mechanics of when a bot is triggered. I'll tell you why trading bots are weird. Our stuff doesn't use candles, so we're cool on that. I could write a trading bot that longs and shorts off all these things. But an example is that you have like a candle. It's fixed in space. I'll teach you something pretty cool. Why most technical analysis trading bots fail. Let me draw this really quick. This is a good little blurb as well. What am I gonna do here? Oopsie. This is a cool thing you guys might never have known. So I have a candle right here, right? And say that you wrote a trading bot off of a MACD or moving averages. Let's draw them right here. Your moving average has been doing this, and your other moving average has been doing this. Okay, they're both approaching each other like that. Okay. A new candle forms at the start of a minute right here. Okay. And actually, let me draw this differently. Right here. At exactly the end of this candle on the 1 minute chart, the two cross over. So this moment in time, the two cross over. Okay, and this is live. So now we move to the next minute. In the next minute, this candle happens, okay? And all of a sudden, this candle goes up, okay? Think of a good way to do this. Actually, let me draw. I was actually trying it right the first time. Let me make it easier to see this one. Okay, this is your fast moving average. And this is, I'll draw your slow one right here. So you have a data point here and a data point here. this candle has a data point, and this is your slow one here, and then here, okay? So right here, your moving averages are right against each other in the distance that you see between these candles, right? And then you go to the next minute, and all of a sudden, this green candle starts rallying straight up. I mean, like straight up. It just goes straight up to the moon. And what you end up seeing is that because the moving average is looking at the historic data points on here, that this dot now moves higher. So each time this goes up, this guy moves up. So the white one moves higher and higher and higher and higher. If this green candle goes to infinity, then this line goes up even faster the higher this candle goes. So if you're to zoom in on this, you see that depending on how high this candle goes, the crossover takes place at a different point on the timeline. The more this green candle moves, the more to the left the crossover takes place. And historically on a chart, the crossover may have taken place right here in live data, but and your trading bot would have executed the first time the two crossed over. But when you look at a historic chart at the end of the day, depending on where this candle closes at versus where you get the signal would be here. If you look at the same chart at the end of the day, the crossover actually took place further back in time. So when you program your trading bot, which one of these do you choose? And a lot of people don't realize that. You can't use a real-time technical analysis, candle-based discrete system without understanding the problem that comes with the discrete math that goes into it. This is one part that's a problem. So you got, like you said, the higher this goes, the faster this white one moves up. If this candle goes to infinity, they're going to cross over here at the previous candle. So if this candle goes to infinity, the crossover actually took place here because this line goes straight up off of that pivot. Think of it like a hinge. So as the next candle moves higher, your actual crossover moves back in time towards the next candle. So which second or which time or which area did you actually train your trading bot to execute on? And what happens if it executes and comes down and executes and comes down? So what I'm saying is in real time, when the two crossover and you get your signal, never matches the same chart you look at historically at the end. You're like, the crossover was slightly different. That's weird because I bought here, but when I was watching the candle live, the crossover is like when you do your back test, the back test is just looking where those two lines are anchored and crossing over, right? But a historic chart is based on the discrete closing price of each candle. If a 1 minute candle, every indicator on your chart is just snapshots of that 60th second. So depending on where it crossed live, trading bots on technical analysis fail because they can't even match backtest performance. So you have to actually sim trade through them. And what you'll start noticing is that when you get crossovers, if that's your signal as this example, sometimes the indicator will cross and uncross and cross and uncross and cross and then uncross. When the candle's just ticking up and down a couple of seconds, you might hit that sweet spot where you get 40 or 50 entry signals. You have to actually program around that thing that happens. I know this because I tried a long time ago to fiddle with trading bots that use TA before I abandoned TA completely. But you have to kind of work around is, do you execute once per minute? You actually have to tell your algo on technicals not to do that. So that's why like a lot of trading algos fail. Because people are not understanding that just the mathematics of candles alone create additional things you gotta code around. So you can't just be like, this my MACD went positive, let me long there. Well, you could have been a minute late to that trade. So there's an inefficiency. It doesn't mean it's going to outright fail, but there is inefficiencies to it. And then also, what do you do when the signal is like at that sweet spot where it's like cross and cross, cross and cross, cross and cross like that? It's like buy, sell, buy, sell, buy, sell. So you have to actually physically code around that. And so when you're doing any kind of algorithmic programming that's using price-based indicators that are using discrete mathematics like this, a candle data point is a packet of information. It's not just data. This candle contains, at any point in time, this candle contains 4 pieces of information: open, close, high, and low. That you either have to have your signals only at the close every single time, at the end of the candle or whatever, or if you're doing it in real time, you have to code around that effect that I described. What kind of tools I use to backtest the signals on the platform? It's very simple. We We have done it in many. So some of our people in our community do back tests here, and we all do them different ways. What I've done for like hedge pressure, monthly hedge pressure, is I keep record and we share the data sheet with everybody. Is that example, 80% of days will close on the same side of the blue that it opened on. About 90% of days will close on the same side of orange. We measure, I just say every single day. We've done years of back tests on this. Where we opened, where we closed, and we just count the days. It's simple as that. So our style is that. So let me give you some stats, okay? Again, we've been building all these techniques for many, many, many years. We've just added on to it. When this ratio is greater than half, which today it's not, you'll have same side close roughly 90% of the time. Under all conditions, which means this is better, we don't have that today, it's roughly about 70% of days will close in the same zone it opened in. So 70% of days are likely to hold 570. 90% of days are likely to hold 585, and 80% are to hold 586. So these are actual stats from our back test. So when I'm doing my trade setups, I'm looking at the same thing. As you guys remember when I said hedge pressure is going to be your high volume, as you approach it, you guys can see that you get little volume pops right here. Again, right? Boom, boom, boom. Volume, volume, volume. Okay. Is this market going to stabilize? Honestly, I don't like how choppy it's been. Honestly, just don't. This is very and we talked about this yesterday, right? There's a rule of thumb I use. Anytime the VVIX is above 100, you can prove that the market is going to have unusual amount of choppiness. The V's are going to get exponentially wider, and they're going to have curvature. You can see that it's going to go to like a big V's, small V's, big V's, like it's all over the place. So you just have unusual choppy market when these conditions are, and that's very high. Like this is like I have rules of thumb that I use. Your ideal months that you want to trade in are going to be when your VVIX is below 100 and your VIX is below your contango midpoint. So long story about that. Great months like here, this month after month of solid trading. June, July, August is the easiest trading you're going to find. Up in here, like I said, my rule of thumb is anytime you're above 100, you can guarantee a choppy market. Ever since the FOMC, steamrolled the market, we've had that condition apply. So markets like this are just really, really bad to trade. I kind of tread lightly on them. I'd rather keep all my money and come back and hit it hard when market's going to stabilize a little bit. Are we bearish on maps? No. SPY is still pretty clean on monthly maps. QQQ is not. So Nasdaq is looking bad. S&P is looking good. That's kind of the state of like what we're seeing. Like I said, I am erring to the bull side in general, but you guys know the rule. The rule I have, I'll short off a bear zone top if that is less than half, and that is right on the edge. So the question I have always here is, do I short off of that or not? And I think I'm going to choose to kind of avoid this nasty, messy market. Look at this. Very good. I'm sitting out. I'm not getting the plays I want. This Fed turds ruin our happy day. Thoughts on the market close tomorrow, not today. Jesus, the market's close. Just the futures market should still be open, at least for the half day, right? So tonight, the futures market should probably be open. I don't know. I mean, I want to err to the bull side. I'm not bearish this market at all. I'm still very bullish everything. I've been waiting for good solid market bottoms to take. I'd like to see a clean break of NASDAQ to give us some steam here. That'd be a good setup. Oh, God. How did I trade for I built the tools at Rocketsuiter? Well, I mean, I built my stuff one at a time. We didn't like, you know, Rocketsuiter has like 15 prominent techniques now. In 2015, when I coded the risk interval algorithm, so we reverse engineered a program called CME Span to get that. It was like one new tool, and I just basically, as the years went by, I created tools for myself and for we had this like little programming geek club that would make stuff like this. We were like, oh, we read this patent by the CME group. Let's exploit it for trade ideas. And then it was like, okay, what else can we do? Oh, there's this thing called velocity logic. Okay, we can exploit that for a trade idea. And so we just were like on this kick of just reading all the information out there on the mechanical stuff. And like, let's look for repeatable things in the market. Well, rules implemented by the exchange would be repeatable. So then we were like, okay, let's just create tools. So it was like even before Rocketsuiter, I just had like a couple of new tools that I added, you know, to my plate. And I was always on the path of trying to use some kind of system that made sense repeatably. And like ever since my early days of like fiddling with technical analysis, I was always looking for an excuse to abandon it. So I didn't really use much early on. I used risk intervals. I used support and resistance as kind of like my first abandonment of TA. I'd look at like previous highs and lows, things like that, charting stuff, until we dove into the options world and said, oh, we can find pivots that way and it's better. And that was in 2019. So before Rocketsuiter, I would use volume profiles, VWAP, support and resistance. That was it. And then I created the risk interval, which gave me some structure. Then everything fell into place after that. Red lines, yellow lines, hedge pressures, zones, things like that. Yeah, DD is less than half. But one thing to take that I always tell people, DD is less than half, but one of the things is when it's on the edge, I'm still holding my breath, wanting the market to be bullish. While my rule is less than half, I can take a short. The reason I'm not is because when it's on the edge, I'd rather see the market become bullish more than anything as it's trying to become bullish. I'd like to wait to see if this becomes bullish as opposed to bet that the edge is going to flip bearish. As the majority of candles and months and days are green, on the edge, I hold off trying to be contrarian. I try to err to the side that's probably going to flip. Right? So even though I'm not eagerly like jumping into this, I am still kind of like, okay, maybe it might move, right? But the market is way too choppy. So one of the things that I tell people about my little VVIX talk I did yesterday was that whenever VVIX is above 100, you can guarantee that the market's going to chop like this. If you're out there trading your Apex accounts, your ETF accounts, or anything that has trailing drawdown, today would have just nuked you alive with all the drawdown, especially if you're trading NASDAQ. Imagine the market going nowhere and you longed or shorted. Doesn't matter what you picked. You busted accounts, didn't you? And that's what I teach people, is that one of the best gauge for trader funding program survivability inside of the trailing drawdown type accounts is that when your VVIX is above 100, you will experience chop that's enough to blow up your accounts, right? So today's a great example of that. And I love when I teach something and the very next day it does it. You just say the market is too choppy to not have lots of drawdown no matter what you pick. As a matter of fact, today, the stock market has gone absolutely nowhere. My one attempt at a trade on a bad read, I just got in and stopped out. It was 1,500. Not that big of a deal. I got 20 accounts. I touched it with one account. Not even anything. Here. It's a rule of thumb that it's a rule of thumb that just tells you how the market's going to trade. It doesn't predict the stock market. It doesn't predict the direction. It just tells you how the market's going to trade. Anytime this ticker is above 100, give or take, you're going to experience choppiness in the market that gets exponentially choppier. What it means by that is, as you see, the choppiness on NASDAQ is widening. Do we all see that? It tends to become the case when this is above 100. You get these kind of divergent mechanisms that take place in the market. Divergent. Higher highs, lower lows, but the market's gone absolutely nowhere. And so that is one thing that does happen. Below here, the market tends to stabilize and not get wider. So even if you picked long or short, it didn't matter. The market's chopped around enough that you blew up both sides. And so as a rule of thumb, I teach trader funding traders is that in this environment, right, anytime it's above 100, you're going to experience chop. And now that's ever since the Fed nuked the market. You're going to experience chop on intraday as well as like swing trading. That's going to just basically chop your account up. And look at this. It's chopping on the longer scale ever since here. And there's a clear night-and-day difference between what the market traded like on the way up. See, not a lot of chop, right? It just kind of moves in one direction. The downside is very limited. Even the selling is very mild. A couple of days of mild selling, right? Ever since you get that, this is a state of how markets are going to move, not where they move to, but how they move. And you see every single day, God, like the chop is up and down. So you may not see me so hyperly aggressively posting big ass, 50K days and 20K days like you've seen before. In this environment, you see me trading very lightly. I mean, just very tapping it. I'm kind of sitting out a lot. It might seem so boring to a lot of you, but I'm not taking a lot of loss either, right? So it's a nice little, it's a rule of thumb. It doesn't predict anything about the direction. Nothing predicts direction, but does predict the exponential widening of the market. So a slight little bit of curvature over time. You see how it's curving a little bit? That's what it's telling you. See how it's curving a little bit? It's not just a straight line. There's a little bit of curvature to it. That's what that second derivative actually is all about. A little bit of math involved in that. I guess I'll say like, maybe not the highs, but you can see like the bulk of everything is kind of curving out. And then here, draw a little better. So the idea is there's a state at which volatility itself becomes volatile. When something itself becomes something, right? That's a first order or differential equation. First order differential equation. Everyone that took a basic economics class solves itself. PE to the RT. Remember the PERT equation. The exponential dependence on something implies compounding, i.e. curvature. So anything that's value depends on its own rate is a first order diffie. So this always becomes the PERT equation, which just basically is a fancy word for curvature or compounding. Domino falls and knocks over 2, and then the 2 knocks over 4, knocks over 8. So compounding is curvature. The market can become just exponentially choppier and weirder. It's a good rule of thumb. You guys like that, right? These are golden nuggets. Yeah. And like I said, how many people, Apex had its 90% off sale, which was great and lovely, but, it's not the best time to trade it, right? The chop is too much. You're not going to get trending days. I'm not sitting here saying, aha, let me long the market, because today's the big breakout long day. If the market breaks out long, it's going to basically just be like straight candles, and then you're not going to get trending market. You're going to get the market chopping and chopping higher and chopping lower. So it's kind of smart to see that ahead of time, and it's kind of smart to not take a lot of loss, right? You bet you $5 today we have all-time high. I hope we get all-time high. Yeah, I've been waiting for this market to flip bullish for a long time. I'd love to see this market go bullish. I would love that more than anything. I'm trying to get to my 2025 goals is to get in the top 20 leaderboard in Top Step. I just started to get 100K payouts with ETF and to get 100K payouts with Apex, just on stream, just to show you guys. I've already done 15K with ETF. My first little payout with them. And then I'll do Tradeify, because somebody told me I need to do Tradeify on top of that. Okay, so today there's really nothing good, right? Nothing looks good to me. DD ratio is less than half. There is that resistance on bear zone. I don't think this is going to be the bull day that we want. The market is flipping back to being that the 47% of the market cap of stocks is actually in the bear zone. That's not the best in the world. So, and I don't short it either because I don't have any short, like normally sorry, this is a short signal right here. When DD is less than half, bear zone top is a short. That's one of the 3 places I do short. But here to there is the setup. I still don't feel like taking it. I think I just want to wait this one out. Let it pull back, sit on the sideline. How do I usually use the DD band? It's always a long entry every single time. So here, when I touch it, I always long entry, except for when a catalyst is active, then I don't. When the ratio is greater than half, I will long with the heavy hand. If the ratio is less than half, along with the lighter hand. Looks like it's flipping to try to go bullish. Not the worst sign in the world. There's a lot of stocks on the edge here, moving back and forth. Now it's back below. So yeah, no active positions for me on the table. And it's kind of nice because you guys may not know that, but if you go through our program, we train you how to see the market like this. And first thing I said was the market's going to be choppy and probably not going to go anywhere. So I've avoided a whole lot of disaster. And that's the best part. Sometimes when you watch like a bunch of like bad traders or guru traders trade, they'll blow up today. Market went nowhere and they lost all their money. Monthly map video. Yeah, let's go. Let's go. Don't forget, everybody, don't forget to click that like button on the stream after I talk about discipline. Let's get 100% discipline on that guy. NVIDIA, once you break monthly hedge pressure, you start to get a gamma event. So here and here, volume spike at bull zone. Talk about these all the time. As you approach hedge pressure, there's a volume spike. So the volume is amping up to here. And when you touch bull zone bottom, there's a volume spike. Our high probability pivots, 41.5 and 40 are the big ones. Breaking bull zone is actually really bad. This is likely why this just fell below half. So NVIDIA no longer in a bull zone. It's no longer crediting itself to the DD equation. How the DD equation works is a very simple protocol. So if you know that bear zone is resistance this way and bull zone is support this way, we look at the aggregate of the sum of the stocks. So what the DD band or the DD number actually equals to is a weighted sum of a function of the stocks. That's weighted by market cap. So we take all the stocks in the S&P 500. There's 505 tickers. We add them up. So what the function actually is we take the total market cap that's in a bull zone. So if NVIDIA is here, its market cap is put into the bull zone bucket, divided by market cap total of bull plus bear. So we take all the market cap of all the 505 tickers, whether it's here or here, and it goes into one of these 3 places. So we, So it's the percent of market cap that's bullish, percent versus market cap that's bullish or bearish. If it's in the middle, it doesn't count. So NVIDIA, no longer being in the bull zone, has dropped resilience DD drastically, as it was one of the bullish stocks keeping this higher. Now 40% of the market cap is in a bull zone versus bear zone. So we call it a bull bear bias is what DD actually is. And so off to the side, if we zoom in on the small chart and make it bigger, you can see the moment that NVIDIA, because it's such a big part of the S&P, right? The moment NVIDIA starts falling out right about 2 minutes after the hour, you You see right here where my mouse is, the DD band goes from 49 to 47 to 43 once we break out. So there are some stocks that are losing that really strong bull support, which is not the best thing in the world. So that's from NVIDIA. Monthly map in general. So you can see as NVIDIA jumped back in the bull zone, the entire, look, it represents, look, almost 5 or 6% of DD by itself, right? Okay. Monthly map on NVIDIA is still bullish. It's still really good. You have bull zone strengthening, bear zone weakening. This is a sign of liquidity and sign of short squeeze and sign of long accumulation. So NVIDIA has no signs of stopping. Like the options structure right now is still showing that people are willing to buy the dip. And the idea that bear zone is deteriorating like this, at least for the next 2 weeks, NVIDIA is still pressing higher to the upside. Now, there is a volatile area right here, which is around expiration this month. So as you see, anytime there's a bear zone above a bull zone, there's volatility. So the problem, I think, with NVIDIA and other stocks is that while it does have resistance right there, it does have volatility in this range. So where you're trading is kind of the middle of that range. NVIDIA has highs there and lows here. I would still err that it goes up before it even does any selling, like exhaust the move higher. But nothing in the option structure right now tells you that NVIDIA is selling off. It's probably one of the strongest maps we do have. Let me look at Micron as well, because that was kind of in the news the other day. See a monthly map on Micron. Micron's the opposite. Micron's extremely illiquid, and there is no strengthening or no weakening of the bear side at all. So Micron is hitting a resistance there. Yeah, so some of these tickers are looking kind of bad. I don't know. I don't know what I want to do today. Palantir, yeah. Not good. Oh boy. All right. So anytime the bottom of the bull zone is sloping up like that, it means liquidation. People are selling. So the structure on Palantir is still selling, and this goes through February. So bulls are just jumping out of the stock. It's likely going to be one of the stocks that continues to sell, despite anything in here. The top of the bear zone is resistance usually. So as you see, there's resistance here. Over time, you've got any kind of short squeezing you'll see. But as you see, as the bear resistance is going higher, it means shorts are shorting harder, bulls are liquidating. It's just the way this works. And so, unfortunately, I think Palantir is about to get nuked. Doesn't look good. You don't see any bull strength. You're trading directly into bear zone. So what this tells me is that this is the high until something changes. Palantir is not breaking above 80 for a month. So you guys like the monthly maps? They're so good. Just shows you the option structure. So like other than like technical analysis that's trying to like predict price, this is the option structure. This is how people are positioned right now at this point in time. So it's like never really wrong. It's just people's opinions change and their positions change every day. So we get a map of like what people are actually doing. Palantir actually has no product. They developed government contracts, a software company. Yeah, I mean it's one of those ones that there's just weakness in general. Like I think it was a very hot stock with the gurus for a while, and a lot of people are talking about it, but it doesn't seem to have much substance in this environment. Yeah. Did I take any? I didn't take hedge for long because Cat was active. I'm not doing much today, unfortunately. I'm gonna take today and just kind of sit on it. If you were to put a gun to my head and tell me what I think the market's going to do, I think the market is going to is like chop its way higher. Maybe S&P 5970, and then figure it out from there. I don't really feel the market's going to sell off today. I think it's going to be mild. So we'll see. what cat was that? It's pre-market selling, self-catalyzing. So nothing, no event caused it. It just moved on its own. So I think that if I were to make a call today, the market's more likely to move higher than sell. It's not crashing out. So if I were to make a call today, I think this equilibrium might be achieved again. Like it's going to chop its way higher and end up here and then decide what it wants to do. It looks like we are warding off this 59.30 level pretty easily. I'm still not like eager to trade any real money accounts on this at this point. We'll see. Yeah. I don't think there's a lot of there's a lot you can really do right now. But what's good about what we do is we can kind of see this from a mile away. I do like to see that ratio is kicking back up to being slightly at half or greater, which is, I think, good. But we'll see. All right, you guys, what do y'all think we should do today? Call it? Sit out? I invite you guys. By the way, who here has gone through the classes and has any feedback? I want everybody that's gone through the classes, tell me something in chat. And I don't care what it is. Say something nice or say something mean. There's no penalty for saying something mean. But give me some feedback. What is your experience when the class has been, especially if it's your first time going through them? We spend about an hour a day together. Is that Amberline overnight MHP? Yeah, it is. You guys have any feedback for me with the classes? Like, what is your experience? Are y'all liking the format? As detailed as it is, and as much as time as they're putting into explaining everything? Because I want to invite some new folks to take the class, and we have a certain thing that I want to tell you guys. If you sign up for the classes, which we brought them back, they were just free as part of the platform. So if you're using the platform, classes were free. But people are like, I may not want to pay the full price for the platform or whatever. So it's like, okay, cool. So we brought it, like the link I just typed in and just posted in chat. There's a link right there. The classes. We made it like, okay, you can buy the classes like a book. It's $20. And you get full access to like a daily Zoom call. It's literally $1 a day. If you guys want to do the classes, we told you guys after 3 days, we'll even give your money back if you don't like it. We don't make anything off of $20 for sure, but it definitely gives you a lot of information if you guys want to go take it. And you want to jump in and see what we do. It's called the 20-day Profitability Mindset Masterclass. And what Profitability Mindset is to teach you how to think of the market as being profitable. My whole speech about shopping carts is kind of like the attitude of which the classes are. It's not just feel good, it's behavioral stuff, but it's also repetitive stuff. Like, why am I buying 4 contracts instead of 3? Why am I sitting out? Why am I doubling down here? Why am I cutting out here? I have such a regimented process on how I trade. The classes go through it. So if you guys check it out, at least if you ever want to buy a trading book or learn something on trading, for $1 a day, the value is whatever people are saying about the classes. That you can, that's the value to them. Like I said, I like make promises to traders, but if you're interested in going through the courses, I am very proud of them. So if it's something you guys enjoy and you're enjoying from it, we're trying to make a lot, we're putting a lot into that. We're creating material handouts to give to you guys. A lot of neat things to enhance the courses. But yeah, we'd love for you guys to sign up. We pick up tonight. We do 3:30 every day. We do about an hour or so in Zoom. Each course covers a specific topic. We start off with the most mind-blowing mic drop moment in probably everything you've ever learned. The first class itself is a complete mic drop. It reveals the biggest flaw in your own trading strategy, like right out the door. It exactly poses the question that you need to ask yourself, and it identifies exactly why you're failing. And everyone's the same. That's the one neat thing about it. And then we pose a theory that's really neat, and we prove it. I wrote a program that proved it. Is that you really don't even need a trading strategy to be profitable. As mind-blowing as that is, we prove it by creating a bot that can randomly long the market at random times of the day, and all it adjusts is the position size to maintain a certain amount of risk loss in the account. And over time, the bot that randomly longs the market still makes money. It's incredible. And what it really does is it sets the framework of no matter what you do and what analysis methods that you chase or apply, that's not the key to success. The trading bot makes money randomly longing the market. The key to its success on paper is that it throttles its risk based on its account size. The smaller the account, the smaller the position. And it targets losing only half its account on 20 straight days of losing. And even losing 20 days in a row, and at the end of 20 days, you still have half your account left and you're still randomly longing. Ultimately, the bull market catches up with you, and you ultimately make not only some money, you make a whole lot of money. You actually become wealthy with that trading strategy per the bot. Now, again, it's not a real trading strategy, but it's a hypothetical that poses the question. It's not your indicators, and it's not your technique of application of tools. Is not what makes you profitable. And so the best part about the classes is it shakes up the foundation. You might say, like, you've been trying different recipes of indicators your entire life and it's not working. You leave that first class saying, I don't think it's ever going to work. And you start focusing on what does matter. It's position sizing and risk management. The only way to make money as a trader is to take the appropriate amount of, to have the appropriate position size for the risk you're taking with the confidence you have in that risk. So higher confident trade, bigger trade. Lower confident trade, smaller trade. I have a system that I use that throttles those things down. When you're counting cards, playing blackjack, when you know your odds, you bet big. If it's in your favor, when it's not in your favor, you bet small or not at all. And you need that kind of scale. The appropriate profitability mindset in trading is a masterclass in position sizing and confidence metrics. How confident I am that my signals are lining up. Higher confidence bet bigger, lower confidence bet smaller. How confident am I that the market's going to chop around and go nowhere? Very confident, so I'm sitting out. These are active decision making. It's not just I'm sitting out because I'm a pussy. I'm sitting out because I have a way to gauge that in the market. And what I just said earlier, what I think the market's going to do is I think it's going to chop higher. I think the S&P is going to go to 59.60. The Nasdaq's probably going to go to, let me get that level. But still, I don't really care to trade it. Nasdaq, right, 460 probably. Nasdaq probably going to chop its way to there and then kind of like dick around, and who knows what's going to happen. But the idea with that is that even though I know it's maybe going to do that, my confidence in how it gets there makes it hard to trade. So I'm not going to apply a large position to that. So like, it's not like I'm gambling anymore. It's like I'm counting cards, and the courses take you down that path. It's like ways to gauge the appropriate position size you need to take. If you didn't know that you can blindly long the market once a day and hold the position until the end of the day, and all you did was change how big your position was based on how much you've lost, that you ultimately make a lot of money just doing that. Now, hypothetically on paper. Now, that's actually a real trading strategy that some firms use. Your 401k definitely uses that strategy. They just keep throwing money at the market and keep throwing money at the market. As long as you're putting money in your 401k and allocating it to stocks, they're continuing to acquire stocks on your behalf. So as the market is dipping, they're just buying and buying and buying. Your 401k is going down every paycheck you put in. And ultimately, when you retire, you got a lot of money in your pocket because 70% of trading months are green. You didn't know that fact. It's a fact. And of those 70%, 80% of those months lose less than a third of their monthly highs by the end of the month. So there's a lot to that. And of the 30% of monthly candles that are red, 60% of those red months gain back at least a third of their monthly loss by the end of the month. So markets are always a moment away from turning green. You always think of it like that. And the worst sell-off months, you have 2 or 3 selling months. As long as you survive that, the years of bullishness that follow typically recover all your losses many times over to make money. So the idea about the classes is it shocks you with facts like that to teach you that it's not your recipe of indicators that ultimately are the recipe of your success. And that's what we want everybody in the classes to go have some fun with it. See some supporting materials like PDFs, easy to read text. We're making them, Ian. I got my media person making you guys the cheat sheets as we speak. We did a light mode and a dark mode. So light mode so you guys can print them out. Appreciate you guys and your feedback. I love hearing feedback. So with that being said, most time when people say take my trading course, it's garbage rehash of garbage stuff. Like literally. It's like a course on chart reading, a course on chart patterns. It's all nonsense. And that's stuff you can learn for free on YouTube. Don't ever buy anybody's course. It's charting and chart patterns and technical indicators. What am I looking for right now? I'll tell you, these trading gurus love to continue to rehash technical analysis. There was some nut job on Twitter that was trying to argue with me like a week or two ago, and they sell a class, and I went to their website to look at their class. They give a free version and a paid version. I don't know. The dude was supposedly some, 7 or 8 figure trader at some prop firm decades ago. I don't know. There's a bunch of one trick ponies from 2020. Everybody made millions of dollars, but now he quit his 8-figure job to sell you guys a TA course on Twitter. So make sure you understand that, that kind of stuff is just designed for newbie digestion. Chart reading, technicals, case studies on stocks, looking at charts. Like don't trust somebody that says they're an 8-figure trader, but now they're selling a course on chart reading. Like I was even inspired. I'm like, you know what? I want to teach that same series of topics for free, and just like, here's it for free. I looked at the syllabus and I was like, I almost wanted to say something about it. But the dude is like, I don't know. I think it's kind of silly. You quit the $10 million a year job to go hawk a chart reading class. Okay, that's fine. But whatever it is, that stuff doesn't work. It doesn't work at all. There's no value that you get from that directly relates to your trading performance. You have to understand that, right? Do I have a preferred trader funding program? So I use Elite Trader Funding. I'm a live funded trader with them. So I'm at the prop level with those guys. So I'm trading their real money. So I'm not using their evals or sim to funded program. I did for a while, but they promoted me to the top. Apex. I'm about to start doing funded family and Tradeify, since like I know Brett and I know Jay Dunn. So as far as preferred goes, and Top Step, those are all the ones I would recommend that I have experience with. I'm sorry, I don't have experience, those are the ones that I would recommend that I have heard positive things about. The ones I have experience with are Apex, Elite Trader Funding, and recently Top Step. And I hear they're all really good from the others. The other two that I have that I'm about to get started with, Funded Family and Tradeify, I hear great things about from other people. What do I think about smart money concept, ICT stuff? I've never actually taken a dive in the ICT's teaching, so I'm not really fluent in what it is he teaches. But it seems to be, from what I've seen on Twitter and other posts, is that it's really rooted in trying to find liquidity and find support and resistance through using charts to find liquidity. It's a unique concept, I think. Finding liquidity is what we do, so it's in the same ballpark. It doesn't use options. it uses charting. So I'm curious to see what the principles are and how liquidity is found utilizing volume and candles and charts. It's probably a very good system. It's probably not. It's probably more subjective than I'd say it is. Like repeat, like 3 or 4 people will come up with this 2 different levels that are nearby. You know, like how our red lines and yellow lines are somewhat subjective. People get like slightly different answers because of where their eyes see the candles. Anything you base on candles will have slight subjectivity to it. But there's a lot of successful people that I know that use the smart money concept. And so it has some merits to it. If the goal is to find liquidity and trade around that, you can't fail. My one question is, how can you find it on a chart? I'd love to learn myself. So I think something that's looking for support, resistance, liquidity, market makers, you can't go wrong if that's the goal. That's the right goal to have in any kind of trading system. But I don't know anything about it. I don't even know if I'm saying it right, because all I've seen is people posting about it on social media, and a lot of people do it. So, and a lot of people I know that do it also use our stuff and say when they put the two together, it's like dynamite good. So, I mean, I'm a big fan. You know, ICT is a good. I've heard some of the podcasts and stuff. I mean, he speaks very well, teaches very well. I'm a big fan myself. I just honestly, you know, I honestly have no experience with the system, so I can't really say much about it. But on the surface level, it does look like it's asking the right questions and trying to achieve the right things. You love Tradeify and My Fun and Family Rich. Okay, cool, good. Top Step is great. They don't give a lot of nonsense. They have problems with their platform, but they seem sincere. Yeah, everyone has problems with their platform. Dude, the prop industry has just exploded. Everyone has problems with their platform because the prop firm industry. I run a trading platform. Let me explain to you what they're experiencing. Don't go hate the player, hate the game. These guys aren't trying to fuck you over with their platform. They're just growing so fucking fast they can't handle it. Rocket Scooter's gone through a growth spurt. You know, we passed 10,000 user accounts. Rocket Scooter's stream has tripled in size in the last 2 weeks. Like, we're experiencing a tremendous growth spurt. What happens on the technology side is nobody could expect that the funded program world would be such a hit. Nobody in their infrastructure planned for explosive dynamite growth across the industry wide. This was a little gimmick that a few firms back in the day, Earn to Trade, Top Step, you know, started this. And it was like, oh yeah, there's a prop firm thing in futures, but nobody was trading futures. Nobody cared. But since COVID, the industry exploded. I'm talking exploded. I'm talking like these companies went from making like maybe, you know, 50 to 100K a month to making 10 and 20 million a month in sales alone, or sorry, profits alone, sales through the roof. You know how much Apex rakes in sales a month? Between 50 and 100 million in sales. It's incredible. You know, the influencers that work for Apex, you know how much they get paid a month just to hawk Apex? Hundreds of thousands a month salary. That's how much money is going around. So what happened with a lot of these companies is the explosive growth is just overwhelming their shit. And even Tradeivate couldn't plan for that. The company that built the API that almost everyone's non-rhythmic framework is built on Tradeivate's API. They almost own the monopoly of 90% of all prop firm trading uses Tradeivate products. And even Tradeivate wasn't designed for this amount of explosive growth. They were a discount futures broker in a time when nobody traded futures. 1 out of 500 retail traders maybe touched a futures account. Okay? Now, God, I can say maybe 1 out of 3 new traders that start trading stumble into futures. It is unheard of explosive growth that just overwhelmed everybody's shit. The website doesn't send the verification email. If you check your spam, it should work. Let me ask the guys. But if you need, you can log in. Try to log in without the verification email. Just try it. Just log in without the verification email. Try to reset, and try a different browser. That's what we tell people to try to log in. You're just trying to sign up. Let me work with you and I'll get you in right after the stream. Let me actually ask my team really quick. Hold on. It's very strange because for like some people, we've had a couple people say exactly what you said, but like 1 out of like 50 people seem to have the issue you have. So I'm sorry that you're experiencing it. Can you DM me in Discord or email? I'll get the guys. I'll get the text thread on it right now. Just sign in. It'll work perfect. Yeah, just try to sign in. Just make sure, see if it works. They disabled that so they can update the system. I think you could sign in without it. Why did I choose to sell Rocket Scooter to the public instead of going to private institutions? I wasn't trying to sell anything, to be honest, to anybody. I like the idea. Teaching has always been something I've done. In college, I used to teach as an undergrad. I even taught at a university. I love seeing people. Like, it's just like if you're designed to play music, you pick up a piano and you just feel in love when you do it. For some reason, like being in front of people and seeing people's eyes light up and seeing people like snap into getting something, especially someone who doesn't believe in themselves or doesn't believe they're mathematically savvy or whatever. And like, I can never trade because I don't understand math. And it's like, well, you don't have to understand that. There's a whole bunch of things to it. And seeing people like wake up and wake up one day and just be like, you know, you did something great for me, Matt, or your class did something great. To me, that was always so rewarding. I think like as a teacher, as somebody that likes to teach, my previous career as a chemical engineer, I mean, I worked in a thankless environment. Everybody was smart. Everybody knew their shit. Everyone was cocky. No one was ever, but one time I did have a job at a plant where I was always being mentored by somebody, and the people that were mentoring me were fantastic and they took pride in it. And it was like, there's just something neat about it. My boss that hired me, I'll tell you a story of why I do this. So the answer is that I'm not trying to like, yeah, I could shop this around to a hedge fund or something. It was never my prerogative to build something and cash out. My prerogative was to reshape the industry, to make a name for myself. I'd rather be famous rather than rich. I'd rather be remembered rather than forgotten. I'd rather be impactful rather than selfish. So I've always been like in this mode, especially with trading, was that I've always volunteered for many years to do very big things. So let me tell you a couple stories to help you out with that. So when I got my first engineering jobs, they were thankless. I worked in a sea of cubicles with a bunch of other fucking nerds just like me. Everyone's smart. Everybody's doing their thing. But there was like no reward to it. But in college, I taught, and I took great passion in teaching because the goal of the class was to help undergrad students do better in their real classes with the professor. And so I took a lot of pride in like beating the system. And the students are like, hey man, you helped me with this one problem. And this was great because I never could figure it out. And then they go and ace the test. And there's a little bit of pride that comes with that. I always loved that ability. And then when I finally got my first really cool job, I worked at a plant. So I worked at Dow Chemical as a call them run plant engineers. But I was the lead engineer at a facility that I ran some reactor units. And so when I was there, everybody that I worked with like mentored me and took pride in mentoring me. Like they want to take you under their wing, like father-son kind of thing. They train you. They're proud when you learn something. And so I had a boss. And when I went to interview there, I'd never worked in a plant before. I had zero plant experience. And when you're an engineer, those of them who work in plants will tell you, it's one of the hardest jobs to get. As an engineer, getting a job at a plant is like the limelight job. That's like the better paying job, the harder to get, hyper competitive. 1,000 people will interview for like one position, and you're like the one person that can get it. So a job opened up for like a limelight role at this plant. And this was when I was like 27, 28 years old, something like that. And I interviewed with no experience, and somehow, the the engineering manager of the plant loved me. I was the guy he had to hire for whatever reason it was. And I thought I bombed the interview. I walk up to this thing wearing a shirt and a tie, in a suit. And he walks up to me in the parking lot. Hey, nice to meet you. We talked on the phone. He's wearing blue jeans and a Dodgers t-shirt. Okay. And I'm just like, he's like, hey, you might want to take that tie off before you go in there. These guys are going to eat you alive. You look like some Ivy League guy. He's like, we're all blue collar guys here. Take that off. So, the fun thing was that, he was just like, and after I went in this interview and I walked in, it was such a crazy experience because, like I said, I had no experience, never worked in a plant. I walk in, there's this giant table and there's just people sitting around. There's like 15 people. It's all walks of life. Like half the dudes were like, they look like bookworms with pocket protectors. Like very like the scientists from the labs. And then you had, they had lab coats on and stuff. Then you had like the guys that were sweaty and covered in dirt coming in from the plant. I mean, and had engineers sitting there. There's a mix of everybody. And they're all looking at me. When I go there, there's a chair right here for Matt with some papers on the table. And when I sit there, they're all kind of looking at me. And then like one of them's like, hey, so what'd you used to do at your other company? And I'm just like, oh, well, I used to do this thing. And he's just, he's sitting there. He has Aggie ring. He's like spinning it on the table while he's talking to me. It's going in circles. And he's like, yeah, so what'd you do at your other place? You used to design something. Oh, yeah, you worked in oil and gas. So refineries, right? Well, we're a chemical company. I don't know anything about refineries. Can you maybe like draw me a refinery on the board? Like, how does a refinery work? And everyone's like, yeah, draw it. Yeah, I don't know. You ever worked at a refinery? No, me neither. And I go up there. There's a whiteboard, right? This giant whiteboard. And I'm up there, me standing here, right? With my tie taken off in my pocket, take my jacket off, roll my sleeves up so I don't look so egghead at this interview. And here I am scribbling a plant and just turning around, talking to people, drawing. This is what a refinery does. This is what this does. And I hear a couple people like commotion behind me, giggling, laughing. And they're just like, and I'm like, I keep looking back, like I'm sweating a little bit, but I hear people just like commotion. I turn around and half of them are smiling. And then the boss starts cracking up. He's like, sit down, dude. These guys are just fucking with you. Please don't draw a plan. And everyone's like, yeah, I'm about to fall asleep over here. And I'm just like, oh my God, right? So the mentality was just to like throw me on the spot and fuck with me in an interview. It was so funny. And they're like, we're gonna see how far you were gonna go. And I was just like, oh yeah. I was like, wow. I think I said something corny. Like I was like, I hate all of you guys. Or like something like that. Or like, I hope I don't get the job. And everyone was laughing. So it was kind of funny. So anyways, we sat down and they were just like getting a talk to me and asking about my capabilities. They were really just curious about how smart I was and how well I worked with people. I think it was really the important part of it wasn't about the experience. It wasn't about anything. But like, the boss, the hiring manager, the one that was just like, yeah, these guys are just fucking with you. He was like, he's like, I want to train somebody with no experience who seems like they can learn. And I'm really going to train you to do it the right way. He's like, you have no experience, which is great. Not to undo any bad habits. He's like, I think you're the guy that can learn very quickly. I'm going to teach you everything I know. The first day on the job, he's like, congratulations, you had the job. Like he stopped me in the parking lot on the way out. Like I was walking to my car and he comes out. I was like, you got the job if you want it. And I was like, yeah, I definitely want it. So then like the first day on the job, he comes up to me, he hands me a book. He hands me Outliers by Malcolm Gladwell. It's nothing to do with engineering. And he says, for your first task, I want you to read this book. And then next week, come back and I want us to talk about this book. You see what I'm saying? And I was like, if you ever read Outliers, it's a fantastic book. It's about people that are smart or accomplished beyond the bell curve of what normal people can do, like masters of their craft. Like, what is it that separates somebody outlying on the bell curve versus you who may be in the middle? What habits do they have? What characteristics do they have? What do they all have in common, kind of thing? And so like that kind of mentorship that I had, half of it was engineering, half of it was like teaching me how to think, teaching me how to be different, teaching me how to think outside the box, giving me enormous amounts of responsibility as a 28-year-old kid. I was running the reactor that all the 5 other engineers depended on me having uptime. If I went down, they went down. And so, I had a very important role as a young age. And so half of the job was training me how to do the job. The other half was teaching me how to be reliable. Because if I could think outside the box, they have one more added, I guess, soldier that they can count on to prevent disasters at this plant. They don't want you just kind of mirroring what other people are doing. They want you for your brain, and they want you to say, if there's something bad that's going on and everyone gets together, you got to come up with ideas too, right? And so half of his mentoring was to teach me how to think outside the box, how to think critically, and honestly just shaped me as a person. It's like that's what I loved doing when I was a teacher. It's inspiring, and I'm sure he took great pride in what he did. I was very thankful for the opportunity. I was kind of like, I'm not gonna let you down. He's like, nah, I don't think you will. He's like, I think you understand. I'm gonna take you on a journey. I'm gonna teach you how to think better. I'm gonna teach you how to solve problems. Always came to me with a question. When I asked him a question, he asked me another question, kind of thing. So that kind of like thing was just so inspiring, and it's kind of like inspiring to me that I always kind of mirrored that same approach to teaching. And so I love giving back to people because it makes me feel like I'm doing something really good in life. I'm already rich. I already have money. I don't need to go get more money by selling something to make more. I'm not the guy that needs 50 Lambos. I got the house I want. I got the girl I want. I got the car I want. I'm good. I really do truly feel like we're making a difference. So good story, right? So why I don't go sell Rocket Scooter to the highest bidder and just dump it. Instead, why do I waste my time coming here trading and teaching people stuff? Because I truly do have a unique passion for actually that. The name of the book is Outliers, Malcolm Gladwell. My first day on the job at a plant. Made me read a book about the statistical commonalities of geniuses and people that are accomplished outside the bell curve. So yeah. How do I add futures data to your account? Jerry Westbrook, go to connections, click on connect. And so if you have a CQG account, so contact any broker that works with CQG. So EdgeClear is one of them. AMP is one of them. Phillip, Dorman, Ironbeam, Cunningham. Those are all the majors. Any one of the futures brokers, you just need a futures account and you need to buy futures data from them. They're going to give you a CQG login that's universal that will work with our platform. Somebody says I seem to be a good guy. Well, appreciate that. I tend to be. You've heard similar stories with nuclear engineers when you're in the Navy. That basically that the people you work with just want to see if you're cool and very smart. They don't give a shit about anything you've done or accomplished. That's it. They want you to be cool because everyone that's an engineer is very smart, especially at a plant. Everybody that like top to bottom, the scientists to the dudes out there turning wrenches are all extremely brilliant. It's assumed that you're brilliant when you get there. You're not there because you're average. You're there because you're the highest level of intellect, and everybody there is super smart. So it's a baseline. It's not even celebrated. It's like it's expected. So they want to see that you're at least smart enough to hang, but they also want to see that you're cool to work with, that you're not too stubborn, close-minded, things like that. That it's very much like the most interesting experience I've gone through is interviewing for big oil companies and big chemical companies. The culture there is just extremely different. It's like smart people that you wouldn't know they're smart until they talk, and you're like, whoa. Gifted, like everyone there is gifted to a degree. Very, 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 very intelligent people. Last interview, you were at the CTO, a team lead. So during the interview, after one question, you team lead made a wrong suggestion, was fired directly on the spot. Oh, that's crazy. Like the market's trying to chop higher, but I think things are starting to stabilize. DD ratio is still less than half. I think I'd approach this market very cautiously today. As I said 59.60 was about where I thought we'd go, the S&P. 430 was where I thought we were going to go on NASDAQ. Again, I really don't. And we're going to chop higher. Just not a good trend today. I really wouldn't be putting anything on the table, to be honest. Did you have any luck getting into your account? IK, you have no more email accounts. Please let you know how to sign up. Try different browsers. Oh, wait. Have you signed up or not signed up yet? Have you paid? DM me in Discord really quick. Send me a message right now in Discord. Go here. Let me get you in. Go here. Go here. Click my name on the top right. Send me a message. Give me your email that you're trying to sign up with. And I'll look up everything for you. Who is my mentor in which aspects of life? Matt Sensei. So, back in the day, and I'm gonna bust it out to show you. I haven't done my goofy antics before, but people used to call me Sensei all the time, and because of which I do have a Cobra Kai headband that I wear a lot when I'm trading and trying to be funny. So, you know, because, you know, Matt Sensei. People used to call me that. It was funny. So I've always had my Cobra Kai that comes out on occasion. We're back to slaying good bull markets. I'm going to wear my Cobra Kai again. You always do the dead catalyst balance standing. Yeah. So my mentor in trading, nobody taught me anything in trading. I'm one of the rare circumstances. Well, actually, you guys taught me more than like working together with the group inside of Rocket Scooter. There's a lot of people there that have taught me things. Outside of that, I have no mentor in trading. Everything, I'm one of the rare cases of that everything that I did, I sort of built from scratch. Because I came from an era where mentors weren't easy to come by. And honestly, I'm glad that I did, because I came up with something unique for myself. So, like, I don't have a teacher in the trading realm. Can you recommend a good place where I can learn how to trade options? Ashton Nolan. Go look him up. Ashton's my go-to guy for teaching options. Ashton's boss. Very smart guy. And he's a good teacher. As a starting point, he's a very good resource. We used to be on a podcast together on the street with Peter Tickman and some others. I'm bored with this market already. Ed works in a paper mill and would send you new guys to the power plant to get a bucket of steam. Oh, that's hilarious. Oh, so you work in pulp and paper, Ed. That's cool. I had some friends that took that path right out of school. You get to work with like non-Newtonian fluids and stuff. That's kind of fun. To get a bucket of steam, that's hilarious. Dude, when I got my first restaurant job, they got me to drain the coffee pot. So there you go. You know, hey, you know, side work at the end of the restaurant shift, everybody's got to go do something. So your job today, can you drain the coffee pot so we can clean it out? I'm like, okay. Not the coffee pot, the teapot, the thing that makes the tea. So essentially, it was like, you know, just open it, drain out, fill up the thing, dump it, fill up the thing, dump it. But what I didn't know, there's a water line feeding into the back. The canister was just to make the tea, and the water line was turned on. There were like 7 or 8, you know, times dump in the bucket. Or I'd say just get me to just pouring water out. I was feeding it to the back. Which kind of funny. You programmed the DCS for about 10 years. Oh, nice. Did you work for DCS? You work for Honeywell? Or no? Aspen. Who? I don't know who does DCS units now. Still Honeywell, right? And we used to at my plant we use DCS with the Aspen Tech APC to go with it. Good old plant stuff. Running a chemical reactor was really cool. It was a very cool job. I actually ran three reactor trains. Reactor auxiliary stuff. And each one of them was about the size of with all the auxiliary stuff that went, each one of them was about the size of maybe 2/3 of a football field. And so my specific reactors, some of them are very cool. One of the trains I ran was built in the 80s, very old. And then I ran one that was built in the early 2000s, which is a newer one. And so the reactor was like super cool. There's like 25,000 tubes, and the thing was like maybe 30, 40 feet tall, like that. But to like run this giant machine with like 25,000 tubes is just incredibly cool. And making sure that the reaction stayed stable was my job. Making money at this plant was my job. Oh, cool. And then you went to that group, Integrate All System Honeywell, Yokogawa, Alabama PLCs. Nice, nice. I had limited experience as the process engineer. My job. My job interacted with audit. I basically, as an engineer, I worked on the automated process controllers more in the DCS, but they were tied to the DCS because they set the they would set control points to some of the valves and some of the temperature controllers and stuff. The DCS was not allowed to be touched by the engineers, though. There's a very strict line drawn at our plant there. That was the operators only. Anytime I had to change some of the DCS, I had to tell the operator, and he had to do it. So we never got to directly play on it. The APC was our world. You see violent swings to the downside and catalyst being made. See reversal to the upside. Look for solid support. That sure it's a good sign of support. Yeah. Microshell's market's going to be just booty today. Lucas, already told you. Ashton Nolan. Here. That's the options guy. That's the options guy I tell everybody if you want to learn options. He's really good. Boring ass day, but hey, look at this. I'm out there wasting my time and effort. Let's get my money. All right, I'm bored. I think the market's bearish and selling off. I think the market is trying to become bearish. But I think after today, we're going to have a really good, solid bull market. I think today's the last day it's going to try to sell. But that's just me. Oh, I just saw your text, by the way. Hold on. Wait. Let me see. Dude, that's crazy. I'd like to send me a picture from LA from all the wildfires. It's like hazy dark in the city. It's almost like a thunderstorm cloud. That's crazy. All right, guys. Well, as you know, not every day is a really rock solid trading day, but with Rocket Scooter, we can tell that from the start of the day, the market's just going to be kind of weird, kind of choppy, kind of hard to manage. And so, you know, it's been kind of like ups and downs. I'm not necessarily trying to short the market. I don't have really good short setups. Obviously, when you're on the edge, DD is less than half. There can be a short setup here. If it loses 515, this is bad. This is bad under these conditions. I still err when, like I say, when this is close to 50, I always err to the bull side to wait to see if things do stabilize to be bullish. But yeah, like it's just the market is not clean, and I could see that from a mile away. So why go out there and risk anything? Oh, you're fun. Is that you? Hey, got you, bud. All right, email. Let me try to get you in here. Let me see if you actually signed up. I got you, man. I can say like a very, very, very small subset of people have the bug that you have, and it doesn't let you sign up. And I don't know. I'm going to investigate to see if you got in. Okay, we'll check this. It doesn't say you've created an account under that email address. Okay, so that's what it is. Okay. Yeah, it's like what's happening is something's never get the bear. Okay, so let me okay. Let me pass this on the tag. Really quick. I got you. Hold on. That could be an issue with our newest patch. Okay, I'm elevating your issue directly to the highest place it can go. I'll get them right on that today. Yeah, sorry about the inconvenience, man. This was happening. You're trying to sign up an account, and it's just not, you're not getting past the verification email stage. So what I tell people to do, if that happens, try a different computer or try using your phone or something. That might sometimes, like I said, I don't know the mechanism of that, but a lot of people have just said, oh, I sign up on my phone at work. The DD levels on SPY. So DD is a futures thing. So there are no technically DD levels on SPY. They're automated if you have a futures data feed connected. So they're automatically drawn right here. You can convert them from S&P futures to SPY. I wouldn't recommend converting because there's a whole thing that happens when you convert futures indicators to equities or equities to futures. They dance around. So you can't effectively convert them and they'd be the same. Like I can't just draw a solid green line in SPY that matches here because when you get there, it will ultimately be at a different place because the conversion is not one-to-one. They don't trade identically. They trade around each other as they both go up or down. So what I do is I put SPY here and S&P here and I look at them side by side instead of convert one to the other. Is DD levels in SPY manual? Oh, that's why you couldn't find them. Yeah. So they're going to be on futures charts only. So some of our techniques are just for futures. Some of them are for equities. So as a futures trader, I'm looking at both at the same time. I'm looking at SPY and S&P futures, and I'm using the two different sets of indicators together for confluence. Will I try every single time trade on QQQ now? Remember, this is the very single flexibility point that we do have a rocket scooter. At the bear zone interface, you can do an every single time trade or do the short. They're both good setups because you have two conflicting things. Let's put micros on it. I'm going to be just like a little wimpy here and just do some micros. It's a very low probability trade. I would at all not be doing this, but I always do this trade every single time. My confidence is very low, so I'm going to do some micros. So bear zone to bull zone, I take that trade every single time if I can. When this ratio is less than half, however, bear zone is also a good short setup. So it's reduced to a coin flip. Because it's reduced to a coin flip, I'm going to risk $400 on this particular setup. So one of the problems with this particular setup is that when this ratio is finally bearish, the bear trade probability increases and is pretty good. I still take the bull side trade every single time if I can. But when you approach this from the bottom, there can be a short setup. As you see all day long, there is short setup, there is long setup. It's more like a coin flip. So because it's like sometimes it works, sometimes it doesn't, sometimes it doesn't, sometimes it works, that's because of this. The DD ratio less than half means that the market wants to go this way. But the desire for liquidity to be found means the market always wants to go this way every single time trade. They're fighting against each other. So because of that uncertainty and because I know it's a coin flip, just to prove that I'm probably going to be wrong and I'm going to be wrong small, I just put micros on the table. So this is what we tell you about trading on risk management. So I'm only like $300 or $400 just to take a stab at it. One-to-one trade. And the idea is in this particular style, because I know it's a coin flip, because my confidence is low, my bet is really small. And that's what we tell people, like we teach you on that. And I'm probably going to be wrong on the trade. I don't expect to be right on the trade. And I expect it to still be volatile. And I expect, because my confidence is low, I'm going to put very little on the table to trade it. It's pretty cool, right? So I usually, Jake, one of my favorite trades I take is trading from here to there. It's just as a scalp. It's not, when this ratio is greater than half is where it's the highest probability of that trade working, and I usually hit it hard. When it's less than half, which it is right now, the bear market is desired. The market wants to be here. It doesn't mean that it's going to crash to that, but it's wanting to stay down here rather than go up there. But there's still good scalping potential from there to there. So ideally, at the bear zone interface, when the ratio is less than half, which it is, there's kind of a an overlap of our rules, because one of the rules says I take this trade every single time, which I do, but another rule says that's also a good short when this ratio is less than half. So this is our one rule that we have in this condition that we have that makes it an absolute guaranteed coin flip. Because it's a coin flip, I get to make a decision. Am I bearish the market using other circumstances and other indicators, or am I bullish the market using other indicators? Longer haul, I'm bullish. Current today, I'm not. But there is a good scalp potential there. And if I do want to take it, let me take it small and risk, $300 or $400. Nothing crazy. And so I said, I'll risk about $400 in this trade. And if I'm wrong, I'm just going to cut out. So about 514 is where I'm going to be done on this trade. And that's it. So I have a one strike stop for 1-to-1, and that's basically it. So roughly about $400, $450 of loss is what I'd be dealing with. And so when I pushed the button, I knew 400 was about my loss. I did micro position just to keep it small. Right about 514 is where I'm going to get out of this trade. That's roughly equivalent to S&P overnight dynamic hedge pressure, which is that support, which is likely where I'm going to get a pretty decent run on this trade if it does decide to move. But I don't have a lot of faith in this market. So breaking monthly hedge, I'll just be out of the way on this one. Like I said, keep it small. So control, right? Everything I do is with control. And let's see if I can take it. See if I get something small. Like I said, just throwing pennies at it. So it's not a great trading day. It's about on something big. So what you're saying is you should short because I went long. That is definitely the rule, Jake. %100%. I'm still biting this like nasty fucking cold. All right, let's see if we get the bounce. Just for funsies, let's double up right here. That's right on the edge of my stop. Let's bet that the S&P does not break monthly hedge and see what I get. So I doubled up on the trade right at my second entry. So I did 5 there. I did 5 more there. Let's see what we get. And this is just make or break for the day. I want to see 42 hold for the day. If it does, that's good. If it doesn't, it's bad. Let's see if I flip this trade green. I DCA'd a little bit on that just to pull in. I like to see monthly hedge pressure hold. This is 59.42. That's our make or break. I tweeted that last night. So I allowed a second entry there. I'm holding my breath. We'll see if anything comes out of that. This is just a hard day to trade. I wouldn't be doing anything, to be honest, if I wasn't streaming. I'd be sitting here grinding out camos on Call of Duty if I wasn't streaming. But I'll demonstrate just a little risk management, a little control. The stop loss on this one now is roughly going to be, now that I did a double setup trade, I'm going to let this go to 12. And then if it doesn't work, it doesn't work. So I'm looking for this orange line to support. So I'm gonna allow twice the risk for twice the return. So instead of 400, I'm gonna get closer to like between 8 and 12. I want to see 59.42 hold for a greater principle of the market not crashing today. We'll see if that holds up. So say your prayers for this guy right there. We'll see if she holds. Am I liking Beast Games? I watched all the episodes, so I finished up. It's not bad. A couple of things I don't like about Beast Games is fun because it's cool, but what I don't like about Beast Game is that he built this amazing city and all this amazing thing to have the games just be lame. He's like, all right, everybody, look at this giant structure, all these houses, all these cool things. All right, everybody get around. We're going to do trivia. And I was like, of all the things that you could do, so anticlimactic for Mr. Beast to be doing like boring ass games like trivia, like sack races. It's like in the Mr. Beast style, it just seems very low effort. Like the games could have been sophisticated, like Squid Games, like walking across the plexiglass and will it break or will it not break? You know, like seriously, I wanted to see some high production level games. But other than that, I did like the show. I just hated the idea that it's like, all right, 2 teams get together. Like the whole thing was everybody stand. You're standing on type of an icon with a picture. Yeah, it doesn't mean anything. All right, that's your team. Come down. We're gonna ask basic trivia questions. And I was just like, man, that's so lame. But I am liking the show. It's fun. It's fun. Yeah, the game design was kind of bad. I'd love to see that MHP hold. It's trying to fail. I don't like that it's trying to fail. You know, at 59.42 to hang. Oh, shit. I bought NASDAQ. Oh, I'm such an idiot. I'm here. I'm watching the S&P, and I should be watching Nasdaq. I'm watching it by proxy, but Nasdaq in a similar boat. I'm looking for the S&P to pivot, so I should have made this trade also in the S&P. But we're gonna watch S&P monthly hedge pressure 59.42. By proxy, I'm trading Nasdaq on the same pivot. DD back to greater than 5. Oh heck yeah! Can't argue there. I'll go about 12 and call this one. That's tough. It's a tough one. Nasdaq's right on the edge. Ooh, not good. That's what volatility is just really bad at. Yeah, I said don't mirror what I'm doing. Nobody trade. Nobody do anything today. I'm gonna try to risk 12 to make 24. I want to see this particular level hold. Majority of days will hold here. The problem is I don't know how much I'll get squeezed before it pops up there. Volatility is hard for this particular reason. Come on. Get up there. Get up. Come on, get on up. Come on, get on up. Get on up. Obstacles. Yeah, that would be true. Really hard for obstacles for 1,000 people. I agree. But they should have something like, at least the games be, even if they're simple games, they should still at least be more clever. And a game, you could design a game for like that many people. You just have to kind of think outside the box a little bit. Obstacles or the more intricate stuff later. Yeah, I can't wait to see what the next episodes are. But yeah, the show is really cool. I like it. Like when Squid Games did like the Squid Games challenge, they were pretty clever with the games. I've watched Physical 100. Yeah, I do. Physical 100 is awesome too. Like they really thought of it. Like the one game where you had to hold on to that structure and who can hold on the longest. Like that kind of stuff is cool. I like that. Boo to this market. Okay, it's getting close to the time I got to end this, but we're going to wait to see. Hopefully this picks up some momentum. I'll tell you my target here. If we break through here, and this ratio is greater than half, that's good. That's good for recovery. I'd like to see this back up on top for at least the bull case. On the S&P, like I said, we're kind of breaching towards some really scary levels here. I'm probably going to pull this, though. My second entry. So I'm going to lose close to about 1,200 to try to make 24. And if it ticks against me one more time, I'm going to close out. I'm literally, my fingers on the button here. So all of my position sizing is meticulously like I know exactly where I'm going to cut. So this was a 2-to-1 from the second entry, but I don't think we're going to get it. You know. We'll see. My fingers are crossed. right on the edge here. Just what a kind of bad day, right? Not fun. Literally right on the edge. Come on, stocks, give us some love. Get back up to 42. Very little on the table. 1 E-mini, that's it. 10 micros. Right on the edge. Come on, baby. Don't bust in the cat. Don't lose 32. Come on. Get back above 42. Come on. Come on. Get on up. Yeah, Fed minutes are coming out. In a little bit. God, it looks right on the edge there. This is gut-wrenching, man. Come on. Get above 42. Get above 42. This trade goes green. Get above 42. This trade goes green. Right on the edge, I'm going to stop. Come on. Get above 42 and this trade goes green. Get. So I'm watching NASDAQ, but I'm staring at the S&P because the S&P is really where the trouble's coming from today. This is a key make or break point on the S&P. And so I'm very much in coin flip mode. I don't have a lot of confidence in this trade. Get right back above that level, though. That's good. That's good for the trade. Give it a pop. Give it a pop. Whenever you know you're trading volatility, just like today, it's very simple. What I do is I wait for big ranges like this, and I stage in small positions so I can avoid, like big losses in case there's drawdown. Like I said, this isn't $10,000 or $5,000 worth of loss. It's like $1,000. It's nothing crazy. But inside of here, I'm betting that if we're chopping around, that the market's going to pull back at least somewhere, and I make that trade. So because I know that it's a wider travel distance, volatility is all over the place, I just bet smaller and wider. Get in once, get in somewhere else, build a position lower, and then set my loss to how much I'm willing to lose. I was saying I'm going to lose like $1,200 to $1,400. That's kind of what I'm willing to do, and I'm about to pull the plug at 14. So if it keeps falling, I'm going to pull the plug. And I'll close the stream out and call it a day. No, it's not your fault. This is just normal. I'm not even doing anything. It's just one account, one little bit. This is tiny loss. $1,000 is tiny loss. With the size and scale I trade, that's just I'm trading 20 accounts of that magnitude sometimes. Like, $20,000, $30,000, $40,000 up or down between all the accounts. So $1,000 on the scale I'm trading is like, don't apologize for that. It's well within the range of just playing with a couple dollars. That's what I call my smallest trade. Well, like $1,000 is like the smallest, tiniest example, like an example trade. Even if it doesn't work, like I said, I'll pull the plug here in just a smidge. All right, I'm gonna pull the plug. Give it one more tick. It's like literally right on the edge. All right, I'm out. I'm done. We'll let this guy fall. I'll play it again if we get back above the orange. What's the most ever made in one trade? Oh God, hundreds of thousands of dollars. I can't even remember the exact amount, but there were some times on stream when you guys saw me trading, like a long time ago, before trader funding programs were a thing, and I was trading those kind of accounts, which you guys saw me on stream a long time ago. just trading my main futures account. And you would see sometimes up and down 6 figures per day in one account. So that was a good choice to get out of this trade, by the way. Futures close at 6 p.m. Sorry, 5 p.m. Eastern. And so, yeah. Close that guy out. Walk away from that one. Oh, my God. My cough is like so bad. And that's what volatility is. Like I said, let this market pull back. We got minutes coming out. We'll see if there's anything good that comes of this today. All right, y'all. We're going to call that a day. Not a lot of good trading. I didn't do a lot. Didn't take a lot of risk. Just playing around. Couple micro trades here and there. It's choppy. It's non-directional. Like I said today's the best day just to sit out and do nothing. I pretty much did nothing most of the day. Tried a little scalp. It didn't necessarily work. So now going forward, I'm just going to get out of the way. I would say NQ's melting, like crash melting, but we do have minutes coming up in a couple hours, so be cautious. The market's going to be extremely sensitive to that. I'm not betting that the market's going to die or rally. I think it's more along the lines of a coin flip to know how it's going to turn out. I wouldn't be too eager to make big decisions today. I would be more eager to just let things play out. I'd like to see this market flip back to being bullish. All of our greater market signs in the S&P are back to being bullish again today. So it's kind of like once this Fed choppiness and nonsense is over, I really hope to see the market get back to normal. We'll be back front and center tomorrow. Hopefully with the market more stable, I could be making some big banger trades like I did yesterday. Sitting out is an art form and is definitely one of the key cornerstones of my strategy. I use rocket scooter tools to build my confidence in what I think the market's doing. And I am very meticulous about when, where I trade, how often I trade, how much I trade. What crazy foresight to exit when I did? Yeah. I've been doing this for a very long time. And I knew the possibility was there. That's why I only traded with a handful of micros. So that was just a trade to have an example, up or down $1,000 here or there. Not going to break the bank. Not going to pay the mortgage. Just a small trade, small risk, small confidence. So we'll see you guys. See y'all tomorrow in Zoom call 3:30. We'll see y'all later. I am going to go rest because I feel like I'm losing my voice. I love y'all.